renew their strength. They shall mount up with wings like eagles. They shall run and not be weary. They shall walk and not faint. Exodus chapter 15, verse 2. The Lord is my strength and my song, and he has become my salvation. This is my God, and I will praise him, my father's God, and I will exalt him. Chapter 10, verse 13. No temptation has overtaken you that is not common to man. God is faithful, and he will not let you be tempted beyond your ability. But with the temptation, he will also provide the way of escape, that you may be able to endure it. Philippians chapter 4, verse 13. I can do all things through him who strengthens me. Isaiah chapter 41, verse 10. Fear not, for I am with you. Be not dismayed, for I am your God. I will strengthen you, I will help you, I will uphold you with my righteous right hand. Deuteronomy chapter 31, verse 6. Be strong and courageous. Do not fear or be in dread of them, for it is the Lord your God who goes with you.
Yo, good morning, everybody. Back at it with another one, right? Hope you guys had a good weekend so far. Hope you had a safe 4th of July. Those in the States. Shoot, even those of you that are not in the States, if you love America, hopefully you were able to celebrate with us. That was nuts, right? Definitely a memorable 4th of July. So yeah, as we always do when we get started with this, these calls on Sundays are essentially Sunday prep calls. For those that may be new, those of you that have been here for a while, you know what the vibe is, you know what we do. But we basically do a full-on risk on, risk off overview. We talk about the bonds, yields, how those affect the dollar and the foreign currencies and the indices and the commodities. We talk about the full weekly breakdown process, different elements that I essentially pay attention to allow me to make a decision. We talk about validation, invalidation, and many, many other things, as you can see here. We also talk about, obviously, the currencies, and then finally the indices. And then if we get to the metals, we get to them. Or if you guys, want to look at them, we could look at them as well. Or any other asset, right? It could be stocks, it could be anything. But that's more towards the end of the session, okay? If you guys ever have any questions throughout the call, definitely don't hesitate to let me know. Again, I'm here on live calls like this every week because I'm just simply trying to help you. I don't hold things back. Obviously, there's some things that are particular to my private group, like my personal model that I've basically created using the tools that ICT has given us. But even that, I think I've shared here on YouTube. So you just get a lot more support when you're in my private group. And if you guys are interested in that, if you like my teaching style, you can always go to the QR code at the top of the screen, or you can go to the link in the links in the description to go check out what is involved with that and how you could join. But otherwise, you guys still get value here, and I'm going to continue to pour into you. So I'm proud of each and every one of you that have kept me updated, by the way, who just simply watch me on YouTube. And those of you, of course, that are in my private group, you guys have been doing spectacularly. Whether that's just simply learning, right? Getting to the point where you're gaining clarity, which is the whole goal, right? Because I can't guarantee profitability. Nobody can. But I think we do a great job, especially based on some of the feedback, in terms of getting you guys to understand how you can go ahead and be consistent at least process-wise, and then you're able to carry yourself the rest of the way. Okay, so that is something that I do promise is to get you clarity, teach you how to read price action, and then be able to make educated decisions, which you make on your own because I'm not a financial advisor, and none of this today is financial advice, right? But yeah, that's essentially all the stuff that we kind of go over, and anything in between, right? I allow you guys to ask questions. Um, and a lot of the times, you guys ask really, really good questions. So I think we will continue to do that. So again, don't hesitate to ask any questions if you guys have any. Okay? Because the worst thing you could do is sit here and just listen to me talk and assume that, oh, well, he's right all the time, so I'm just going to try to see if he's going to buy or sell this week. The worst thing you could do is that, because I may be bullish, I may be bearish. That may change throughout the week, right? And if you just take what I'm saying and don't do any work on your own, right? We're right a lot of the time, but you still want to have that skill set, that clarity individually, so then you can make educated decisions in terms of what you're doing with your trading. And I give you all the tools that you need, right, to be able to do that. Sorry, I had it kind of cut off. But yeah, take a screenshot of this if you guys haven't already. It's definitely important. So yeah, with that being said, before we get started, do you guys have any questions in particular before we get started? Any like trade related questions? What's up, ATM? Happy to see you. Good morning, everybody that just hopped on, if you just hopped on. So yeah, honestly, the bonds and yields, or the bonds and the currencies, well, yeah, the bonds and the currencies and the indices, if there's a crack in correlation, then that means that on the back end, there's very heavy manipulation. And depending on what the currencies are doing, I haven't really taken a look. We will look in a second. But when there's a crack in correlation, that just shows you that there's a ton of manipulation happening. Okay. And if, say, the bonds are dropping, like we see they are, let me actually get my charts ready. Whoops. So yeah, if the bonds are dropping and the currencies are like rallying, for example, that's showing you that there's a heavy bullishness on the back end of the currencies and something is happening to the currency, right? Some type of manipulations taking place. So you don't want to just pick tops or pick bottoms ever, right? But you do have to be cautious if there's a crack in correlation. And if there's like SMT and whatnot, generally you want to use the EU and GU correlation and then kind of observe the SMT here as well. SMT shouldn't necessarily be looked at unless there is a correlated asset, right? There's ways that you can also use other assets to find divergence that kind of helps with other assets. Like if you have a SMT on the bonds here, right? SMT at the highs and it starts to decline versus the currencies that are maybe rallying at that time, that may be showing you that once the currencies hit a bearish PD array, you got to be paying attention to a change in state of delivery that goes to the downside following the bonds. All right, so that SMT that forms in this is pretty helpful. Of course, you could use SMT divergence between the dollar and the correlated assets too. But again, the SMT with the bonds and yields, we could go pretty deep with that, but maybe we'll do that soon. Teach you guys about that because that is highly, highly efficient, highly helpful. But we won't get into that just yet. So yeah, before we get started and look into anything, we got to look at the news this week. Keep in mind that we're coming off of a holiday. So because that's the case, the day before, day of, day after a holiday, it's low probability. When you go into a holiday that then pushes you into the weekend, generally the first 2 days, so Sunday and Monday, should be looked at as low probability. Sunday obviously is a half day. It's not even a full session. if I'm not mistaken, I believe Sunday's candle on the daily chart is merged with the Monday candle. I think I'll have to double check, but I think that that is the case because it's not a full day's candle. It's not a full day's range. So many times, they kind of just merge it together. But yeah, so yo, what's up, Maddie? Appreciate you hopping on. Hopefully you had a good 4th of July, bro. Hopefully you didn't drink too much, right? I don't drink, but those of you that did or do, hopefully you guys had a fun time responsibly, right? You're not hungover today. That would suck, right? To be hungover all the time and like being a trader. Yeah, that's not the best thing to do. But yeah, again, hopefully you guys had a good time. So there's news on Monday. There's no news on Tuesday. And then there's news on Wednesday, Thursday, and no news on Friday. So before we start any analysis, we always think when we look at the economic calendar, power 3, right? What could this economic calendar be telling us about what the possibility of bullish or bearish power 3 is going to be, right? Oh, that's nice. 11 years sober. Nice. Damn right. Hey, sober for the win, bro. Sober for the win, especially if you're a trader. But, if you're responsible with stuff, it is what it is. There's no shade from me, right? But yeah, so again, every single week, you use economic calendar to anticipate what days are going to play which role in the weekly power 3. Okay. So Sunday, Monday generally is accumulation manipulation. Tuesday, Wednesday generally 70% of the time will create the high or the low of the week, and expansion as well from that. And then Thursday and Friday, whichever day we hit a opposing liquidity pool to the overall weekly direction or an opposing PD array that opposes the weekly direction we're aiming at, if we hit one of those levels on Thursday or Friday, depending on which one it hits on, that'll be the day that generally will give you the TGIF for the most part, especially if we were like extremely aggressive, like say bullish, for example. If it's just ripping aggressively, if Thursday or Friday hits that PD array or tags a liquidity pool, like maybe a monthly high or a weekly high, generally you can expect or start to anticipate, not that it's going to happen every time, because there's weeks that just keep going, especially with a whole bunch of geopolitical stuff taking place and wars and all that. But for the most part, a good rule of thumb is to expect that TGIF can happen off of the heels of a very aggressive price delivery. It could be a slow price delivery that gets up to a particular level too, and then TGIF could still kick in. But the most obvious is what I'm trying to point your attention to or get you to think about. And many times it's after a huge expansion. What about the monthly power 3? The monthly power 3, I mean, you can kind of use certain news events like FOMC, NFP. They may set the high or the low of the month, but you also think of monthly power 3 from the open of the month. And the first week is accumulation manipulation. Second and third week is expansion. And then, of course, the last week can be looked at as TGIF, but for the monthly candle, right? Sometimes the reversal will start to happen in that third week, again, depending on when a higher time frame level based on that monthly chart is met. Okay, so it's all fractal. It's all the same stuff. You just have to form fit it to the time frame that you're looking at. Okay, but it's all fractal. The first presented fair value gap, it's a fractal idea. Every hour, there's a first presented fair value gap. But the first presented fair value gap at the 6:30 time in New York session, that is for the daily range in that New York session. Okay, so it's specifically used for New York. You can also, of course, drag it out for the rest of the day and the rest of the week. A lot of times, even the rest of the month, right? The first presented fair value gap of the week on Monday and Friday's first presented fair value gap that ends the week. If you drag those out for the whole month, especially the next week, those levels, if you go and do some back testing, you'll see they play a significant role in terms of how price refers to certain levels or others, right? and how it forms the weekly range on the next week. So I encourage you to do that analysis this week. Go ahead and go to your charts on whatever asset you like. And look at that first presented fair value gap from Monday of last week and Friday of last week. Well, it's a little bit different this week because Friday was a holiday. So why is the first presented fair value gap powerful? I mean, honestly, the internals, I mean, I'd be the first to tell you, I don't know why. Internally, I don't know why, but it's just a level that is referred to by the algorithm, right? It gravitates to it. The reason why, like the underpinning of the reason why, in my opinion, isn't necessarily something too important to worry about. What is important is the fact that does it reach into those levels reliably, and can you use it as a supporting idea for your bias and narrative? The answer to that is absolutely yes. So if you just go into your study with a simplistic mindset based on how it's going to benefit you in supporting your narrative or being a very reactive level that can kind of go in line with whatever it is you're seeing in price, then that's the best way to spend your mental energy uh, instead of trying to, make things potentially overly complex. A lot of times we try to overcomplicate things, and hopefully you guys are finding that this stuff is a little bit more simple than you thought. But of course, simplicity comes through mastery. But that takes a little bit of time. So hopefully you guys can keep that in mind as you're learning. I know a lot of people, including myself, used to overthink, um, trying to find information that was just not necessarily as important as like information that allows you to make a decision, right? Or helps you understand what supports the idea that you're trading. Like those types of perspectives when you're looking at all the concepts. Like you could think about a breaker and think like, well, why does it create a breaker? Right? What is the functionality with the code? Right? There's some people I know that have literally tried to figure that out. And I'm like, dude, that's like a waste of time. A breaker is a breaker, right? In terms of the context, like where price is going, once you understand the stop run and the breakdown, the fact that it's a balanced price range, and the fact that it should hold to support your idea, I mean, that allows you to make a decision, and it's pretty simplistic, right? But the internals, as far as why it functions the way that it does internally, like with the code, for example, like what kind of code is it? That type of stuff is kind of irrelevant, right? So if you're trying to figure out like for any of the concepts, whether they're helpful for you or not, you're going to want to think from the lens of, okay, well, how does this allow me to make a decision? How does this support my idea? What role does it play in the daily range, right? Let me see. A lot of people are looking for, yeah, there's no holy grail. You are the holy grail, okay? Not any of the concepts. You are, right? So if you master yourself and you're not going to be obnoxiously over trading, over leveraging, you focus on one model, you keep it simple, you think of things in a simplistic manner, like, what do these PD arrays do to support, or how do these PD arrays play a role in supporting the decision I'm trying to make financially, right? I don't encourage you to trade live, right? That's your responsibility because I'm not a financial advisor. But if and when you do decide to trade full time or trade uh, like live funds, you want to be able to be simplistic with your approach. You don't want to overcomplicate. It's very easy to overcomplicate. I deal with it all the time with students, many students, some more so than others. But it's not necessary, right? The market's already complex enough. Don't make it more complex by thinking too, complicated about everything. A lot of this stuff is very to the point. It's very simplistic. But again, seeing it from face value, especially if you're just starting ICT's concepts and you're looking at like the 800 plus videos that he has, or more, of course it could be a bit daunting. You think you need every single concept. I'll be the first one to tell you, I don't use every single ICT concept. I have enough because I spent almost a decade studying it, so I've had a lot of time and experience dissecting all the different content that he has, and all the concepts. I've tried through trial and error to find my way early on, And eventually you just resonate with one or two entry models at first. And then what comes after that, once you decided on which model, like say it's a breaker or the 2022 model, what comes after that is obviously focusing on the context that leads to that model performing well, right? And then of course understanding time. But again, so a lot of times that whole process to simplify takes some time. So I see he says use only one concept to grow. Yeah, 100%. Because think about it. If you're in back testing or trading and you're using 5 or 10 different models that he teaches, every single one, which most of the time comes from us trying to be perfect and seek perfection, or like you said, that holy grail ATM, it just stunts your growth because it makes you focus in too many areas. So you can never be a master or build that baseline with one. Because from that one, the rest of the things you try to do will flourish. But you have to focus on one. Because if you're back testing, especially if you just jump into demo trading or jump into live trading and you're trying to take every setup and you haven't even spent 6 months studying each one individually, seeing when it works, how it works, seeing the characteristics it shows, what ideas support the idea, when does it work the most, when does it not really work. If you don't understand these things with one concept, how in the hell are you going to expect to learn all of them at once? And then you can't use the data that you gather from that time. So you basically waste your time, because if you're doing 500 things at one time and every single journal entry you do is completely different than the other, when you look back on it on your journal when you're reviewing, it's going to be like a bunch of random shit happening. And like, how are you supposed to decide which one is going to be effective and helpful for you? You physically can't do it. So a lot of times traders that trade ICT concepts that do not submit to this simplistic idea of using one model and then trying to develop bias and narrative understanding so you could have context, those that don't look at it that way, also, of course, those that don't work on the psychology, learn after years of studying in the incorrect way that they did it incorrectly. And then eventually, if you decide that trading is going to be what you're going to do forever, even through failure, eventually you'll wake up one day and think, you know what I've been doing hasn't been working. I've been doing a little too much. I can't even get no information from this journal. I think it's time for me to start pruning some stuff, keeping the things that build context, which other models on top of your main model does at some point. At first, though, it's a detriment, right? But you'll get to the point where you're like, you know what? Let me just focus on one model and build context around that model. Like context being market maker models, power three, certain liquidity pools that get attacked every day, time, right? When are the best times for things to unfold? Validation, invalidation, which, all of which we teach here on this YouTube channel, and especially in my private group, right? Because we're live every single day. So there's just more exposure. But, and then of course, risk management, right? That's on like at the top of the list. Order flow, right? How to read order flow, candle to candle. Every single candle tells you a story about the overall story and whether it's something you could trust or not to go in a particular direction. Again, all of which I teach here on YouTube and in my private group every single day. Okay. But yeah, it's very, very important idea, what ATM just referred to, how ICT says to use one concept and then grow within that at first. I have 6 models, for example, right? All 6 of those, I've spent at least 3 to 6 months. I believe every single one of them took me 6 months before I allowed myself to go and look for actual setups. So every model that you have or try to learn has a learning curve in itself. Okay, there's different characteristics for each model. There's different points in which price utilizes these particular scripts in price, which are our trading models, right? The algorithm, if it's an algorithm, it has to run off scripts. So all these repetitive things that we see is a specific script in the marketplace, right? That the algorithm is firing off at particular times. So you got to learn each script individually. You can't go into like, say, coding and learn every single thing right away and then just try to do everything at once. It's going to take you forever. You got to focus on foundations. You got to have your particular style, right? And you got to spend time getting good at a couple of things as you build this house you're trying to build to profitability, right? Each model that you learn, again, it has its own learning curve. So don't forget that. If you guys are finding yourself studying, trying to apply everything at once, I always tell my students who come to me when they're first learning, or even those that have been trading for a while that just got exposed to what it is that I do, or just exposed to ICT concepts. I always tell you guys to go in when you're doing backtesting. That doesn't mean go in and backtest every single possible thing you can possibly learn every single time, right? When people are playing professional sports, what do? They study the basics, then they study, or then they practice, getting their whole body in shape and whatever. But then the foundations to, say, basketball, you got to practice dribbling one day, and then you got to practice a specific crossover one day, and then you got to practice 3-pointers and then free throws. They don't go into every single session of practice doing every single thing all at once. Maybe there's some freak of natures that do that, but most of the time they're very calculated. I'm going to focus on my dribbling today and focus solely there to get the most out of it. I'm going to focus on my jump shot, 3-pointers today, or tomorrow they're going to do free throws, so on and so, or passing, right? They're all little weapons that they have in their arsenal, just like how every single model is a new weapon for us, right? It's another weapon that we could reach for to then try to attain the results that we're looking for. So when you're studying your trading, you got to look at it just like that. Context behind a model can be segmented. There's different pieces of context, right? Validation and validation, reading real-time order flow, liquidity runs, and then reversals, okay? Then your model for pattern recognition, then your model inside of the context that you're trying to learn about. Power 3, all the different components. Not every PD array in that Power 3, okay, or every PD array that you could possibly find in that market maker model, right? The context, visually, you go in there and specifically break it down into pieces, and then do that over time. And then before you know it, if you do this for all these different things that you've been exposed to, and you get good at all of them, right, or at least decent in terms of your understanding, all of this stuff together comes together as a whole eventually. But if, again, you go in there studying like a lunatic, trying to figure out everything all at once, right now, because you have to make money right now, you're never going to learn this. You'll never learn this, ever. I promise you, you won't. It may maybe you will, but 10, 20 years down the line. And who the hell wants to wait that long to learn this stuff when it can be learned in, as little as 2 or 3 years? It didn't take me 2 or 3 years, right? I guess you could say it took me 2.5. Going into my 3rd year, I started catching my stride. And then year 4 accelerated. And then 5 just to 6 to 7 this year. I mean, it's just been exponential, like they always say. And again, I've been live showing constantly, right? Privately with my private group. They've seen it over the years. And those of you that have been following me for the last couple of years here on YouTube, you see every single week, almost every day that I'm live, we're able to find something. And that's not an exaggeration. And it's recorded. So you don't have to take my word for it, right? You could just show up and see that, see if I'm telling the truth or not. But my students can attest to that as well. Those who have been with me for a while. This stuff's undeniable. And that didn't come from me going in and studying every single concept, every single second of every day. It came from me segmenting everything, breaking things down, being patient, knowing that I want to take an entry and find my entry model. But it requires, in order for me to do that effectively, it requires me to have the back end details, the context, as far as why I can trust the setup, right? What makes it trustworthy? What makes it not trustworthy in particular moments, right? What time of the year is it the best for the most part? Because that's a factor too. Because time doesn't just relate to hourly or macros or kill zones. It also relates to yearly, monthly, quarterly, okay? So all this stuff plays a role, right? And again, all of it takes time, especially the time element, especially the higher time frame time elements and seasonality. A lot of times ICT says it takes at least 3 years for you to really feel like you have the foundations understood, because that gives you 3 years of watching seasonal influences, 3 years of seeing the ebb and flow of the market and how it's got a beautiful tapestry of just effective efficient price delivery and, reaching for liquidity and inefficiencies along with time, right? And again, each of these components takes time. So I just wanted to really emphasize that because, again, I always get a lot of questions about this. How do I study? How do I back test? People hear the word back testing, and many times they think, I got to do everything. I got to find a model. I got to find this. I got to find that. I got to do all of this, or I can't back test. And it's like, dude, back testing can literally start with you just looking at TradingView, right? Like you need to learn the tool, right? And then, of course, every concept or video you look at, everything that you're exposed to requires you to go in and touch on it. Just like Stephen Curry on the Warriors can do a crossover, but just because you watch the crossover doesn't mean you can do it just like him. To do it just like him, you have to go physically do it. You have to be good with the ball. You have to learn how to dribble. If you want to shoot like him, you have to also put in the work to shoot and really get those reps. But first you have to know your way around a ball, right? Just like TradingView, that's your ball. Okay. And then the moves that you do, right? That's obviously the models, and the plays that they run to win is context as far as when you should shoot, right? It's just like the context for us when we go from the higher time frame to the lower time frame, right? It's a whole sport, this thing we call trading, but it's a mental sport. But I guess it's more so like battle, right? Like war. But there's a lot of commonalities in all this stuff. So I hope that this kind of eases some of your guys' mind who may be brand new. I know that it could seem like a lot. I know that sometimes even being on these calls, if you're brand new and maybe nervous to ask questions and whatnot, and you're just listening for the first time, or, you have less than a year experience, I know it could be a little bit daunting, but, rest assured that exposure is key. You got to be exposed with someone who knows what they're talking about. Even if it's just ICT's content, you still got to be exposed dramatically, like a lot of hours of just seeing the same stuff. So your mind gets acclimated to how all this stuff operates, the verbiage, the words, what builds our understanding of where price should go, right? Why it shouldn't go somewhere. And then, of course, all the basics with candles and all that, and then unlearning some of the retail concepts as well. But yeah, I don't know. I think this stuff's really important. So hopefully you guys, that may be struggling with this, got some value from that. But yeah. So do you guys have any questions before we get started? Let me double check. Good morning, Zach. Appreciate you hopping on, bro. It's good to see you. Okay, I didn't miss nothing. All right, so again, with the news, we'll see what happens with this. Sunday, Tuesday, and Friday are low probability. Monday is still, from what I classify as a day after the news event, because Sunday generally is smushed with Monday, right? Their candlestick. It's pretty much the same essentially because it's a half day on Sunday. But again, accumulation, manipulation. Then we have distribution or expansion. And then we have the opposite end of the weekly range, depending on what we decide price is going to potentially do when we get to the chart in a second, okay? But yeah, so make sure you stick around if you like the indices, because we will be getting to that at some point. But again, we're building context. Remember what I said a second ago? How you got to learn how to build context? Every Sunday, I'm giving you my process and how I build context, right? Excuse me. But yeah, so there's a reason that I also don't go to the lower time frame on these days. It's not worth it, right? Because if you go to the lower time frame, what are you going to do? We could go to the lower time frame when we're about to trade. We don't gotta really do anything on the lower time frame when we're when we're in Sunday. What are you trying to do? Trade on Sunday? Inside the heart of the manipulation, especially after a news event? I mean, I haven't traded Sunday in 5 years. I'm still able to find moves every single day. So does it really matter? Like in the grand scheme of things, right? If you were in my position, does it really matter to take a trade on Sunday? Do you have to take a trade on Sunday? No. So you could just wait. It's better to wait. Many students that I teach also only trade on Tuesday, Wednesday, Thursday, because they don't want to be caught up in Monday's trading. They don't want to be caught in Friday's trading. They want to catch the biggest portion of the most acceleration. which most times comes from Tuesday, Wednesday, and Thursday, right? So yeah. Yeah, my receipts is me showing you every single week that I can call the market accurately. And again, I'm not encouraging any of you guys to join my private group. You could simply be here and just listen to what I say, and I hope it blesses you and helps you. I don't encourage anyone to join my private group. It's not for everyone. I am very hard on you guys. I show my stuff every single week. My students can attest to it. But if what I show here on YouTube isn't enough to convince you that what I talk about here is helpful, and it can't help you, like just from these live calls, you shouldn't join my private group. I don't encourage any of you to join my private group because I am aggressive, right? I need you to do the work or you don't belong in my private group, okay? Because what I do works. I've shown it for years straight. And again, there's so many people that have been witness to this and have also changed their situation because of it. And again, some just on YouTube, just because I'm pouring things out from my almost 7 years experience trading this stuff. But again, I have no interest in shoving my mentorship down your throat. It's a one-on-one apprenticeship. So I'm actively invested in you because, and time is valuable. So you can't just be out here giving your time to everybody because not everyone's going to appreciate it. So of course there's a barrier, because if I'm pouring my time into you, I value my time. I have freedom in my life. So why would I give it to people that wouldn't appreciate it, right? So that's the only reason I have a private group in general, because I want to actively be there holding your hand. But I can't just give that to everyone. Otherwise, I wouldn't be able to live my life, and I'm just not willing to do that. But I know this stuff helps, and that's why I'm on YouTube, and my students are the main reason I even have a private group, because I just had a free community, but all the spam and just, again, people that are just not serious, like really pissed all of us off. So we were like, you know what? Let's just make a barrier. And again, I don't shove it down your throat. I'm not like these marketing idiots that, first of all, can't even do half the crap we do publicly here on YouTube every week, let alone actually, live the life that they claim they're living without selling stuff. Like my mentorship is literally like 35 people. I've booted people. Like if they aren't a fit, I kick them out and refund them. Because like I don't have time to be playing games. I'm not here to blow it up. If it blows up, great, right? But I'm more so focused on helping and really leaving an impact, more so than trying to shove my stuff down people's throat. Because I could care less. I don't have to do anything. I could trade and that's it and live my life. I make enough off trading to do that. So that's the difference though. All these other people, they're shoving shit down your throat. If you like what I'm doing here and you think working with me on a daily basis would be helpful to you, there's that option. But again, time is valuable. And if you've put in all the work that I have, or if you've put in the work that ICT has when he was pushing his mentorship, you would want to have some type of barrier for those that aren't serious as well, because this is really your life and this is something you value, and the people you work with should value it as well. Otherwise, why the fuck are you teaching them or giving them your time? Right? It just don't make sense. So let me see, what firms do you use? I use, well, for me personally, because it's my favorite, it maybe won't be yours, but for me personally, I like Tradeify. I have a Top Step account as well, but I'm more so nowadays for the last couple of years, just mainly on my personal account, because over the years it's grown large enough for me to be in that perspective. But if I was to go back, I first of all was using FTMO. I got burned so badly with them. I had a $60,000 withdrawal that was loading, and then regulations hit. And without them telling me anything, they ghosted me, denied my withdrawal, and canceled my account. So they stripped my stuff away, took my $60,000 withdrawal, and basically didn't tell me anything. So I was sitting there waiting, not knowing what the hell was happening. And then I didn't realize until 2 weeks later that I was totally removed and my payout got denied. And even to this very day, they are accepting US traders. And I tried to get them to to reinstate me, because it's nonsense that they fucking removed me after I was absolutely crushing it with them. So that put a bad taste in my mouth, because they said, no, we're not going to do that, blah, blah, blah. This was last year when I told them, I'm like, bro, like, here's the receipts of you fucking denying my shit. And I was part of your stuff, and the regulations hit and you kicked me out. Can you like fix that? Because I feel like I was done hella dirty. And they're like, no, sorry, we're not going to be able to do that. So, that's a risk when you're trading with these funded accounts. And that's why I always push you guys at some point, use it as a vehicle to, inject capital into your stuff. But only if you've proven consistency, at least with a demo for at least a year. Because if you don't and you just jump into funded account trading, you're going to get slaughtered. They're made to destroy you. There's like a 3% chance that you're going to make this happen, especially if you have no plan. And that's their statistics that they've, produced. I think it was Top Step that showed the transparency on that. So again, you're in a battlefield of people that are vicious, and these firms are vicious themselves. They may seem like they're trying to help you, but think about it. If you have a 50K account and you have $3,000 that you can utilize, but you can trade like you have a 50K account, how big is your account really? If you only have 3,000 to lose, your account's really 3,000 that is leveraged to the point that you can use 50K leverage. So you have an over leveraged 50K account. So the mindset is completely, you got to understand this. It's still a vehicle to use. It's still, a reasonably cheap in many cases way to get in the door if you don't have the capital up front to trade with. But again, you have to keep this in mind. That's why it feels like it's damn near impossible for most people, especially if you don't have an overall skill set, right? That's cultivated yet through experience. And, assuming that you learn from someone that actually knows what they're talking about, right? Let me see. It's more like a video game. Pac-Man moves teeth. Oh, yeah, exactly. And we are the things getting eaten for the most part. That's an interesting way to look at it. I never looked at it that way. I can appreciate that. Illuminated. I can appreciate that perspective. Down or up, doesn't matter. Yeah, it's constant. It only moves to liquidity, like to attack liquidity and order pairing, right? To pair buyers with sellers or sellers with buyers, or buy side or sell side liquidity with buy side or sell side liquidity, or inefficiency. Or if it's not doing one of those things, it's consolidated. That's literally all price does. Literally, right? And it's also used for companies that get like commodities like, say, cocoa, right, to hedge against inflating prices and whatnot. Right. Welcome liquidity trading, by the way, brother. Appreciate you guys hopping on. Oh, nice. See, what? Am I late to the party? I must be late to the party, yo. You say you've been using that too? That's interesting. It's over 50K. Hey, that's nice, bro. That's nice. I don't disclose my finances to the public because it's really no one's business. Just know that I trade full time and I literally don't have a job. I'm here all the time. And just live my life. I don't have a dick measuring contest. I don't say I'm the best trader. Definitely not the worst. I mean, I show up and show you guys every week. But I don't ever have this dick measuring contest. I'm not here to be the best trader. I'm just here to provide value and help others learn so then they can go ahead and do what they can do. Because what I do is not what you can do, right? Especially since there's a lot of new traders that come to me. It's just not how I run things. I could come out here and shove. I mean, I used to do it. I do it 3 times a year and show, big days that I have. But I don't have the need to do that because when I do that, and I'm sure you guys notice, those that do that, it attracts people that are not really serious. They are just wanting to live vicariously through you making the profit. And although it does help, and I do show students that come to me the evidence, right? But they kind of could put 2 and 2 together if they rub 2 brain cells together. If I'm showing executions every single day and we're making good trades every single day, I mean, it's easy to put 2 and 2 together. But what I make is not what you'll be able to make. My risk tolerance is not what your risk tolerance is going to be. I've been doing this for almost a decade, right? So it's not helpful. And it's never been worth it. And when I used to do that and shove my profits down people's throat, because, I had a little bit of an ego before because, I felt like I had something to prove. And over time, I felt like, you know what? I don't have nothing to prove. I just want to help people. And I don't want to be like all these other people. I caught myself slipping into those other people's perspective, the typical mentor, right? And I never even wanted to be a mentor, but I felt myself slipping into that because I wanted people to see. But I've gotten to the point of maturity in my career where I'm just like, you know what? You're going to watch and see. And if you like seeing that we're calling the market accurately every day, literally every day, which my students in the chat can attest to that, then you'll use it. And if not, there's other people that'll jump off fucking desks and flip shit and go nuts to entertain you. But that's not why I'm here. I'm here to help you, and I'm sure if you stick around and, get some of the stuff that we're going to talk about, you'll see benefit to it as well. And if not, so be it. The ego is a tool to help you survive. Yeah, the ego for me was a tool to help me destroy myself and start to feel like I'm above everybody, and I'm not above everybody. I was homeless. I came up from nothing, and no one's better than anyone else. And I think that more people with that mindset need to populate this overall trading community as a whole, because it puts a bad taste in people's mouth and it pulls the ugly out of people. Money makes you more of who you really are, rather than it being the root of all evil. And it seems to be that there's a lot of evil people in this world, especially those that, try to take advantage of others. Let me see. I believe ego is your lowest form. Yeah, I agree. I can agree with that. Liquidity trading. I could agree with that. I like that perspective for sure. For sure. I mean, there's a healthy dose of ego, and then there's the toxic dose of ego. Some say that ICT has that toxic dose of ego. And, of course, he came out and admitted that it's all for publicity's sake, so he doesn't have to run ads, which is highly effective if that's what you want to do. And maybe, it'd be a good, marketing ploy for me to continue to go back to what I used to do. But again, it just attracted the wrong people. And I feel the way that I do things, the way I present through these calls, I feel like it really helps attract the right people. Because again, you stick around because you see I'm calling the market every day. You don't stick around because you see me driving a Lambo, right? Because that doesn't help you. It's exciting, it's entertaining, it's inspiring. But what should be entertaining and inspiring to a trader, if you're going to keep a level head and not let the money be the main focus, let the process be the main focus, is going to be, by you focusing on the process and whether the person you're listening to has any efficacy behind what it is that they teach. And that's what I try to continue to lead with. And I will continue to lead with that here on this channel. And maybe it doesn't grow to hundreds of thousands of subscribers because I'm not flamboyant like all these other people. And that's fine. If I can help a couple 100,000 people in my lifetime being public on YouTube, that's enough, right? Even if it's 500 people, which, we're already breaching close to that, right? I think that's still a pretty heavy impact, right? So, yeah, well, if you use Bookmap and Footprint and it helps you, God bless you, brother. I personally think that stuff is a distraction, but don't let that bother you. If you do well, you said you pulled in 50,000, God bless you with that. And you should be proud of that. Don't let nobody tell you otherwise if it works for you. Not ICT, not any of the more aggressive ICT traders in the community, right? There's all types of different ways to make money, right? It's not just one way. It's more so based on risk management, right? If you can manage risk, you can flip a coin and be profitable, right? But of course, you're not going to be precise, but because that's a little much, right? It's a little extreme, right? Flip a coin, 50-50, right? But, there's many ways. But even if you trade Bookmap or, Footprint or anything else, and you stick around and just hear what I have to say about the chart, I'm sure that there's still some stuff that you'll be able to use. And again, if not, I always like having traders that don't trade the same come in and share some of their thoughts and experiences, because, there's something that we can all learn from each other, no matter what style you use, because we're all traders in this trader family at the end of the day. So, there's got to be a lot less divisiveness, more, lifting each other up type of vibe. At least that's what I would like to see, so. But yeah, so I think we've chopped it up a little bit enough, I guess, at least for now. So let's actually jump into the charts a little bit and kind of get a feel for what we're going to talk, what we're going to get into this week. Of course, I'll chime in with you guys a little bit, but for those that came here for the analysis, I got you, right? So when we're looking at the bonds and yields, those of you that have been with me for a long time or have been in the stock market for a long time, probably by now understand that the overall bonds and yields have a heavy impact on what the DXY is going to do and what the foreign currencies and indices are going to do. So the yields in particular, this asset right here, okay? 30-year, 10-year, 5-year. This has a direct impact or influence on the dollar. So if this goes higher, that has a heavy impact on the dollar. Sometimes there's a cracking correlation that takes place. But again, if there's geopolitics, wars, or big time monetary policy changes in a country happening, many times there will be somewhat of a cracking correlation because there's a lot of things that happen. More often than not, though, if you're trying to gauge whether you're in a trending environment for the dollar in particular, you want to see this rallying or declining and the dollar following it. Because again, currencies of a country will chase the yields of those countries. Okay. At least in this current financial system, which is, somewhat changing if you guys haven't noticed over the last couple of years. At least in this current system, this is how things operate. Okay. So if this goes higher and you can find a reason for the dollar to go higher, you can trust and believe that that's going to have a high likelihood of going higher. And if that is the case, other assets that are opposed to this asset and the dollar should look to go the other way. That goes back to the understanding of risk on, risk off, which I will pull up. I will pull up that PDF I have for you guys, so you can just get a feel for that. I should have shown it at the beginning of the call. Normally I do, but we got into conversation, right? So yeah, this is what you want to look at when you're considering risk on, risk off. Okay, risk on is meaning that investors are willing to put risk on other assets, meaning higher other assets opposed to the yields and the dollar. Risk off means that they're willing to take risk off of other assets opposed to the dollar and go into the dollar because it's rallying, right? And the others are declining, and the yield should also rally to help support that idea as well. So in a perfect symmetrical market, this is what you want to see in the assets that we study every week. Okay, so if you're trending bullish, you want to see that the dollar's going lower and the yields are going lower. The T-bond futures are going higher, basically the bond market, which is here, right? If you're bullish, right, you want to see this go higher. Okay, it changed. Okay. But yeah, so if you're bullish on the indices, right, you want to see the bonds going higher. That's this market right here. You want to see the yields go lower, right? That's this market here. And then vice versa, right? If you want to see the indices go lower, you want to see this asset going higher, and you want to see the bonds going lower, right? If you want the dollar to go higher and the other assets to go lower. Okay. So again, screenshot this if you haven't already. It's very significant. It's just a market truism, no matter what style of trading you trade with. If you can identify these things, it's very, very helpful, right? It's not a be all end all. And sometimes things aren't going in this overall characteristic, right? Sometimes there's things that are they're disjointed. Maybe a couple of them are consolidating, and it seems like they're all just kind of all over the place. Well, in that case, you know that something is happening on the back end that you need to be fully aware of because there's a cracking correlation. That's a lower probability environment. The first rule of high probability is market symmetry. Okay, so if you don't have assets showing you that everything is symmetrical based on that list I just gave you, which again is a universal thing. It's not just an ICT concept or any other type of concept. It is just a market truism because the market as a whole is a machine together. So everything bounces off one another. Everything refers to some other stuff, right? You just have to figure out what those are for particular assets. For the indices and the foreign currencies, that list I just gave you, all that stuff is significant. The same with commodities like metals. They're heavily impacted by the dollar, the indices, and the bonds, along with the yields in a reverse correlated fashion, which is this market here. Okay. So again, when we look at price currently, let's start at the weekly chart. So if you look at where price is at, you notice that we took out sell side liquidity in here. Okay. Where's my sell side at? So what the hell's going on there? Oh, whoops. Okay. Yeah, so we have sell side taken. We have a high, low that took this low, higher high. So that's a balanced price range. Okay, this whole entire range in here, you go from the high to the low, You notice how 50% of that range was not targeted because we got buy side, sell side, buy side again, and price came down, tried to tag this once more, but because it's bullish, or so it seems to be bullish, we then shifted market structure, or changed state of delivery. And now shifted market structure from this weekly perspective is going to happen when it comes up here. So if you're not quite confident that we're going to be bullish for whatever reason, once it tags this high up here, we're already shifting market structure. You also have a change in state of delivery with this order block. That's what an order block is. Also, if this is going to be a valid order block after this stop run, while respecting this balanced price range, which is also a bullish breaker, if that's going to be supported when price opens up on this coming week, if it was to reach lower again and work within this, we need to see price respect that upper 50%, upper 25%, or even just not even come back to it and just start ripping and shift market structure up here. If that's the case, then longer term for the next 2 weeks or 3 weeks, depending on how long it would take to get up there, we would then look to try to target this up here. We do have relative equal highs here with this small liquidity void in there, if I'm not mistaken. Liquidity void is simply just an area in price where there is no trading. You see that? There's no trading inside that. So that's a highly inefficient piece of price delivery in this chart. So if this change in state of delivery is going to be valid, this might be something that it looks to reach into before we then consider that, price is going to target these upper higher time frame levels, right? We got this wick. Also, if we look to reach into this wick up here, we should be able to target each one of these quadrants. All of these little lines in here can be utilized. There's an 8th level, there's a quadrant. So all of that stuff is going to first and foremost be targeted. Once this is taken out, that would be the next step. So we got this high here, right? We got a wick in here. So that should be sensitive too if it's going to try to go higher. This is an opposing PD array to the up movement. So I wouldn't be surprised if this PD array that's bearish, which is the wick quadrants, is utilized to then open up the next candle and push it down into the order block. We're also trading into this order block, but we'll see what happens with that. I would like to see if we could trade down into this order block if we're going to be bullish, and I'd like to see price start to push away from that. If it does do that going into this next week, even if it just opens up, sends a wick down here, and then starts to immediately run away, that would be enough for me to then believe that this is more likely to be targeted. We kind of are in a range a little bit, and from that range, right, from this low here to this high, you can see that we're at equilibrium, okay? So that equilibrium, a lot of times when you're on these weekly or daily charts, right, the higher time frames, it happens on the lower time frames too. But when we're on these higher time frames and prices at an equilibrium point, especially if it's at the beginning of the month or at the beginning of a week, generally it can present you with a consolidation. So you want to see price start to really show interest to get away from that midpoint of that current range that we're trading in. Why is this low and that high significant as well? We took out buy stops, buy side liquidity, and we also took out sell side liquidity. So this high and that low becomes our new dealing range. Okay. And now when this high takes out this high, this low to whatever high forms in there, that will then become our new dealing range, assuming the price would then be looking to go bullish because it took buy side and sell side liquidity. We're still inside of this parent range, so those levels would still be significant, right? You'd be able to, here, let me make this a little bit smaller, duplicate this. So if we do see price goes higher from here, we have this order block. We needed to break through that order block midpoint to seriously confirm that price is going to now go lower. Otherwise, this is simply a retracement to take stops, tap into this balanced price range, and then look to continue to go higher, which we have a change in state of delivery here, allowing us to assume. If we were to grade this price swing, okay, from the high up here to that low, because we think it's going to be bullish, you now have your quadrant levels in there, 25, 50, 75% level, right? So this is a graded price swing. And those levels should end up becoming sensitive. Notice how the equilibrium point is there as well. Well, I mean, we kind of just pointed that out earlier, but that equilibrium point, right? If price stays inside that, you can expect that unless it moves away from it, we could see price continuously refer to that until it's ready to go. Maybe it takes a news event like PMI or FOMC meetings, or maybe both those don't do anything and they choose to wait till Thursday, to really confuse you, right? That's a possibility. But that's a risk when you're hanging around these higher time frame equilibrium points. Okay. And again, why do we spend so much time on the bonds and yields? Because these have a direct influence on the other assets we look to trade. You want clarity, right? Well, clarity requires a layered approach, not just higher highs, higher lows, and one asset or some indicator, right? You have to understand what the market as a whole is doing. So then whatever assumption you come to about the asset you're looking at, maybe the indices, maybe the foreign currencies, maybe it's commodities like gold and silver, whatever the case may be, they're all influenced by each other, right? Some more so are in a relationship with others than some others may be, but they all work together. And if one does one thing, the other should do a very particular thing as well. And again, this is a commonly known thing. It's not just ICT, it's not me making it up. Risk on, risk off is a very old concept, but it is absolutely applicable to every style. And you have to get comfortable with it. You trading just the NASDAQ or just the currencies because you just are lazy and don't want to look at other stuff or don't feel like it is going to affect you long term. Because the clarity that I have is not possible if you don't have multiple layering approach. Okay. And that's just the way it is. And it doesn't have to be complex, right? It doesn't have to be complicated. Okay. We're looking for very particular things like inefficiencies, liquidity, where has price been at, and where could it look to potentially go? And what is order flow telling us based on our order flow principles, right? Our order blocks holding price, our fair value gaps holding price in that direction, in this case, potentially bullish. Our wicks, when they get traded into, are they being slid on through, or are they rejecting price, leading to lower lows taking place, right? Our bearish order blocks holding in price, right? Our bullish order blocks holding in price. Are gaps like this getting traded through, retraded into, and then pushed away from back to the upside? Okay. Are the upper 25 to 50% levels of all our PD arrays being respected as price moves up to a particular target? Or is it happening towards the downside where the lower 25 to 50% of all the PD arrays we're looking at being respected? Are gaps being inverted to the upside, or are they being inverted to the downside, right? This is how you read order flow real time as an ICT trader. Or if you trade with other indicators and you kind of mix ICT concepts, this is how you can also utilize ICT's concepts in terms of order flow to help assist you in the other things that you're doing to help confirm whether a signal that's being provided by an indicator is useful or not. Or if you could just simply understand where price is trying to go, right? In conjunction with whatever indicators you're using to help satisfy your decision making. Okay, it's useful across the board. Okay, and this is how you go ahead and read order flow. Okay, for the most part, is that complicated? I don't think it's complicated, right? If you don't understand the PD arrays or you're brand new, maybe it's a little bit complicated. But over time, again, especially if you spend time here, because I do this every week, every day in my private group too. If you were to join that, you can expect that the familiarity will come into place, and before you know it, you'll be looking at price and listening to the story it's telling you, because it's speaking to us every moment of every day. Every candle has a story to tell. You just have to learn how to interpret that story. And I may be biased, but ICT's concepts over the last 7 years, I mean, I've tried so many indicators and stuff. I used to use the MACD with a retracement, and whenever the MACD crossed over with the RSI, I would look to buy, and I would fail every time. So it didn't work for me. I just found that ICT's concepts help identify the who, what, when, where, why, in the best way that I've been able to understand it. And it's maybe not going to be everyone's cup of tea, right? And that's okay. But you got to find that thing that works for you. And I feel that some of this stuff that we talk about, well, all of the stuff we talk about all the time, is how I'm able to do what I do every day, and how I'm able to do the things that you see me do every single day, every week. And it won't stop, by the way. But yeah, so in terms of validation for this asset, if it's going to go lower, it's going to have to close below this order block. I would honestly wait for that to take place before I look to short this asset if I was to trade this, or if I saw this same thing happening on the indices or any other asset I trade. I would still, given what we see here, We came off sell side. We're respecting a balanced price range. It's a breaker, right? We're changing state of delivery here. We're about to shift the market structure above this swing high. So if we can get this to trade into this and then bounce away from it, that's an early validator to this becoming at a later time a shift in market structure. Okay, so you can kind of use this change in state of delivery logic to help you confirm whether a change in state is going to take place as well. So that's another little gem when it comes to like an order block forming and then price aggressively trading outside of the order block before it shifts market structure. We can kind of tell already if we get this next candle to trade into this, how that next candle trades into this bullish order block and this gap in here will determine whether we're going to try to get up into this and whether this bearish order block is worth even considering, or if it's just going to be an opposing PD array that was just a speed bump on its way to pushing price up above here. Again, you want to keep your ear to some of the news that comes out in the next couple of weeks, specifically July 29th, because that's when a conversation about the federal fund rate is going to be taking place. And if they hike rates, that's going to be a problem. Normally they hike rates to try to deal with inflation, right? But if that's something that they do, that's negative for the stock market. So if that's the case, if that's what they decide to do, this will run higher, because the rate that they're hiking is this rate. The rate that they cut is this rate. It has to do with the bond interest rate. Okay. And again, the bond market and interest rate market, or but the bond market, interest rate market, that has a huge impact on the country's currency. That interest rate affects everything from credit cards to loans, for houses, for just typical loans. It hikes the rate that's needed because, there's a lot of borrowing that takes place, a lot of borrowing of money to then lend out to make interest. It's also going to slow down economic growth, because there's not going to be as much economic stimulation for them to, for companies to then expand, because they got to borrow money many times to do these big projects. And if the interest rates are hiked, it slows them down a little bit until there's a rate cut. And that's why the stock market goes lower when there's a rate hike, goes higher when there's a rate cut, because economic growth is stimulated when there's a cut. It's not stimulated. It's kind of stopped a little bit or hindered slightly when there's a rate hike, because it costs more to borrow. And if it costs more to borrow, a lot of times borrowing won't make sense for companies, for people that do these huge projects, even for the country to try to do big projects, because you're going to have to pay more on the debt that you accumulate. So it becomes a problem. So that's a simplistic understanding of bonds and yields and why they're so important, how they affect the real world, and then of course how it affects the markets and how we can utilize it to help us understand what bias and narrative can be utilized in a very simplistic manner to help us make a decision, right? Because that's why we do all this, is to be able to make a decision, an educated decision. Okay, so again, I hope all this stuff makes sense. I really do hope this makes sense. I talk about it all the time, but those of you that may be new, hopefully this is kind of eye-opening, because it is helpful, and it is a higher time frame perspective. It does affect the lower time frame, but it's going to take time. Me saying it is one thing. Me saying it and you looking at it and doing it and studying it over time is another. Okay, that's how you build trust. It's like a relationship. Every concept you learn, you have to build a relationship with, and that trust only comes with time. So, it's no different with this or any other concept that you hear me talk about, which is why I encourage you guys to study like savages. Okay, any waking moment that you have, to study some things in particular, as you look to cultivate the whole process you're building, is recommended. Okay, so yeah. Again, with that being said, I hope that makes sense. We do have a stop run here for the 10-year as well. There was SMT here as well. You could see the lower low here and the higher low there. So again, that's just another reason for me to try to justify this shift or this change in state of delivery as something that could be reasonably trustworthy. If we get the next candle to open up and it comes down into this stuff, maybe it doesn't even come to this order block and just stays in this gap in here. That would be even better, right? And then see acceleration that breaks this high. Once this high is taken, again, we have this gap up here. I'm gonna go out on a limb and say that this is what we're going to be looking at. Okay. And that SMT is going to lead to continued buy side delivery. We do have relative equal highs up here. Actually, and again, if this goes higher, the expectation is that it's going to have a positive impact on the dollar going higher. Okay, so that should mean potentially we're going to see lower prices in the indices at some point. July is generally a time seasonally when we see some type of declines depending on what's happening. Obviously, the seasonal chart shows a little bit of bullishness as well. But again, we have to pay attention to the real world, what's happening, because seasonality is not a be-all, end-all. But when it is in line with seasonality, you're really, really going to be going in that direction, whatever that may be, whether it's bullish or bearish, if the seasonality supports it and you're going in line with it at the right time of the year. So with what we see in the bonds and yields, it's going to be significant, right? And in this case, the yields, which has a direct influence positively on the dollar, if this is going higher, we may be able to continue to see the dollar bounce from this level here, but we'll get into that in a minute. Okay. So again, hopefully that makes sense. We will be looking for this here to change state of delivery. If we could get up above there, if we can get above this fair value gap and reclaim it, this will have just been an accumulation, manipulation into this balanced price range. Same thing with this down here. Okay. And then we'll see a rally that gets above this shifting market or changing state. Once it changes state, I think it's going to be a shift in market structure here too, because a new candle is going to form. So once we get up above that, it should be off to the races, trying to get up into this level up here. Okay, and unless this breaks down, right? Say there's an order block here that then breaks through this level and starts to look like it wants to take out this low. Once it was to invalidate this or close below this high to that low's 50% level, we will then have one PD array. We will have a gap in here, so that's a second PD array. And then we'll also have that low being taken out as well, and the midpoint of the balanced price range, that being our 3 PDA rule, promoting price to then go lower. This will end up being a inversion for value gap. We did close below it. So again, unless it gets back above it, well, unless it gets above this and breaks down, we'll be bearish in that moment. But it just seems like it just overlapped this, and the underpinning of everything with SMT in here, you know, it just kind of balanced it out, and we may look to get up above here, especially with the likelihood of a rate hike, especially with the just the overall SMT in here. And then again, the bearish interest for the bonds, you know, that again, all of that stuff is going hand in hand, promoting bullish dollar, bullish yields, and bearish bonds, which should then, if everything is symmetrical, lead to bearish foreign currencies, bearish indices, bearish commodities for a time. Okay. And we'll be able to decide when that's up, or if that's going to be something worthwhile to listen to, right? Because there can always be a crack in correlation as well, but we'll discover that whether that's the case in a moment. Okay. So again, hopefully you guys understand all this stuff. And yeah, so let me know if you guys have any questions, but we're going to move on to the bonds now. So the bonds, if they have that reverse correlation to the yields, if we decide that the yields have a likelihood of going higher, we should see the bonds going lower. And do you see that? Do you guys see that correlation happening in price? Do you see that there's some validity to this? Okay. And if the bonds are going lower, that should be promoting bearishness in the currencies and the indices. We've seen bearishness happen. Okay. Of course, it started to somewhat recover a little bit, and that's fine. A little bit more dramatic and exaggerated in the British pound. There's a whole lot of stuff happening in London. Okay, the UK and Europe. I mean, there's so much stuff. So I wouldn't be surprised if we end up seeing some type of crack and correlation in the short term. But again, for me to look to go bullish for this, I'm going to have to see this high get violated. Okay, because this could easily just be a retracement. We did come off of this low in here. But again, we'll get to that in a second. So yeah, we see that the bonds are racing lower. We do have a large wick and then a big gap in there. So that's pretty inefficient in there. If we were to drop down, I mean, there is a candle in there, a bunch of candles in there that offered. But we got buy side and sell side delivery. So if this is going to be bearish, we don't want to see it come up to these upper levels, right? Once it starts really, let me clean this up a little bit. So yeah, once we were to start breaking back through this level up here, say it was to overtake this whole gap and get above it, that would put us in a pretty strong territory for us to then look for these equal highs. But for now, right, we are breaking down. We're going to have to wait for it to get up there. Otherwise, this could simply just be a range-bound environment. It kind of is, right? If we go from this low to that high, we got equilibrium right there. So we'll see. I wouldn't put it past them to rally up from here and then look to tag this. And then from there, we have to see another change in state of delivery. So in order for me to be really, really strongly on the side of this being longer term bearish, I would really enjoy seeing, I mean, it looks like it's going to be bearish, but to fully confirm it, if say I'm not confident, I would need to see this type of situation unfold. And then, you know, once it breaks down through this, we have one change in state of delivery off of this. And then this secondary change in state of delivery would happen here. That is highly influential if you don't understand what's going on in price, if you're confused and you see a breakdown and you thought it was going to be bullish, for example. Well, if you see a displacement like this, you could simply wait for a secondary change in state of delivery to fully confirm with a high level of accuracy that price is going to continue to go lower. It's a double change in state of delivery. Why is it a double change in state? Well, you have one here breaking down below these up candles with displacement. That's one potential change in state. You have a shift in market structure. Okay, well, if you create another bearish order block and we get displacement through that, and then we come back into it, all you need is that displacement through it. And then you can expect or anticipate that price is potentially going to try to run back up into it. Maybe it isn't a body. Maybe it just shoots a wick up into that. If price stays below that midpoint, you have a barn burner to go towards the downside. It's the same theory when you're looking for it to go higher as well, right? I bet you I could go in here and show you an example of that in this price swing here. Okay, so we got one change in state once price overtook this order block. Okay, we have consecutive candles. You know, there's nothing wrong with using that one, or just simply using this as a bullish breaker, high, low, higher, high. It did dig a little bit deeper, right? But as long as the first change in state stays intact and we stayed above this fair value gap, which again, we talked about all of this. This isn't just hindsight. We've done this analysis already, right? It's recorded. You can go review it from May 27th. You can go look at what I was saying, all like from May 27th up to June 10th, and see what I was talking about. But once you get this displacement here, that's your double change in state. We have consecutive down candles with a stutter candle. Drag that over, that's a change in state. I mean, you could use this down here, but that's really small. And it's got multiple candles with a stutter candle. Once it takes that out, you could see that it was off to the races to target buy side. So that phenomenon is repetitive, right? That is a double change in state of delivery confirmation for order flow, or what I call order flow confirmed. Okay, you may not be confirmed in this, right? You could trade a breaker, maybe you're not convinced. Okay, well, wait for it to retrace into the breaker and then give you that double change in state. You'll be pretty successful by looking at something like that, right? And you could see that once it does that, it's off to the races. It's pure buy side delivery. Obviously, it was a bit choppy, but nonetheless, we went up to the buy side target. You don't got to get all the way up here. You just have to get enough of a range to be able to target and take a trade on. And that's enough, right? That's multiple days going bullish, aside from this choppy, sloppy nastiness. You could see that this high to that low, once it got above it, when price came down into it in here, that acted as a BPR, okay? Again, anything that goes lower to go higher as well is a market maker buy model. So it's also a buy model in there. It's also a buy model in here. We had a sell model unfold in here, targeting these lows, which was a portion of liquidity that has a trend line liquidity. So retail traders, they use typical retail logic. This is a moment that we use against them. And again, we called for this to target this. While retail was thinking, oh, let's go bullish, we were calling for this to be targeted, taken out. And now we're watching for this midpoint here. Either that's going to be closed below, which would confirm this low and that low as our main target, or we're going to get a rally from this because it's high resistance. Why is it high resistance? It's choppy sideways. It's a previous bullish balanced price range. and we got this stop run here. Okay, so a stop run, when price trades into it or looks to trade into it, is high resistance, right? A consolidation is high resistance. If we're bullish and it trades into a bullish PD array, that's high resistance if we're going lower, okay? But it may give us the logic that I've taught you guys recently called deferred liquidity. It's reaching into low resist or a high resistance level, right? Which is, again, consolidation, a previous balanced price range that also has a stop run at the lows. So we may get that rally up to create that potential double change in state of delivery scenario. Once it proves that double change in state, this now becomes low resistance, because then it's a failure swing when this rallies up. Okay, so if it looks to race towards that, we go from high resistance to then low resistance. What is low resistance? A failure swing like this, right? Because it didn't take liquidity. That's resting orders and price. This has triggered sell stops. It's triggered stop losses for those that were trying to go to the buy side. So smart money accumulates down in those levels, and then it rallied. And of course, that logic is being used inside of the logic that I mentioned earlier, right? We have the inversion here. Price went down to a discount, and then price gave us that double change in state. We had one here, second one here, and it was off to the races. Okay. Again, this can be used on the lower time frame as well. It's not just a higher time frame logic, like all this stuff that I'm telling you about. And look, we put the buy side invalidation right there, right? We basically triggered that. We had that last week, and we got down below it. So what happened? Price continued to drop a little further. So now we have our extra line in the sand here, which is the midpoint here of this range. Okay. We want to see if we're going to go short. We want to see continuous respect to lower wicks. We want to see the midpoint respected, the lower 25% preferably, just like this. That is a better confirmation that price is going to keep going lower. We have this low, high, lower low, closure below that, right? So when price trades up into that, this should act as a BPR, a balanced price range. So if we're going to look to go lower, and that's what we're going to, rest our hat on, we do not want to see price get up to lower 25%, but definitely not above this 50%. Remember what I said a second ago as well. If this is going to go higher, it's going to have to break this gap. From there, I would then justify this high and this high. Otherwise, because we broke through this, if it stays below this area, which is, again, the balanced price range, it's also a bearish order block. If we stay in that lower level after the shift, after the change in state of delivery here, and we create another shift and another change in state, we're going to keep going lower. But if it doesn't give us that retracement to help us get that, accumulation up here before it goes lower, or setting up that double change in state, if it doesn't do that, my expectation would need to see this break through this level. If it does that, we have really no reason to believe that this is not going to be targeted, because now this will have been created as low resistance, and it will just be sliding through. I think we are going to get some type of retracement, because, again, this is high resistance. So it's setting up a retracement would leave this as a failure swing, especially if it does not take this low out and the next candle that opens up rallies us up into this and we hang around in here. That is also low resistance as well. So we'll have a double layer of low resistance, basically swapping this high resistance level, working that level to then present us with low resistance, right? High resistance to low resistance delivery. Okay. So it breaks the trend line and they are lost. Yeah, exactly. They don't know what the hell's happening. They get like a blind man in a dark room, right? Don't know what's happening, right? No offense to blind people. I love my blind people. But yeah, so again, hopefully all this stuff makes sense. So we covered the bonds and the yields now. So again, if this can continue to break down, okay, so this is going to be our assumption, you guys. Does everything make sense? Let me know in the chat. Again, it's useless for me to just talk and talk and talk, and you guys are not able to follow along. If at any moment you guys need me to pause or slow down, just let me know. Mind you, I'm like spewing 7 years of experience at you. So, sometimes I may not be able to catch myself talking about things that some of you guys may need further amplification on. But that's why your participation on these calls is so significant, because then I get a feel for where you're at, so I know how to cater to you, just like I do with my one-on-one students. They come to me at different levels of experience. I have to take myself down to where they're at, so then I can be an effective resource. So I can help you guys really, really lock in. And it's no different for you guys here in the YouTube family. One thing I do want to mention, if you guys have gotten value so far or get value from what I do, and you like the channel, you want me to keep continuing into the future, definitely don't forget to like the video, subscribe to the channel if you like what you're hearing so far or have gotten value in any way. It really does help the channel a lot when it comes to the algorithm. And the more people that we get this in front of, the more people I can help. Okay, and that's the goal. It's why I'm even on YouTube. I could care less. If there's no one to listen, if there's no one that is interested in being helped, then I could just go live my life, right? Go on probably more vacations, and not be so concerned about, making sure I get others to come up with me. But I want others to come up with me. I've been blessed, so I feel it's my obligation to come out and try to help you guys achieve your blessings as well, because we're not put on this earth to just work for 40 years and die without being able to do anything fun and admire this beautiful creation that God created, which we call Earth, right? And all the experiences that come with it. And I think trading gives you a beautiful vehicle to be able to go ahead and live your life to the fullest. And that's why I've been so passionate about it. And that's why I want to help you. It's too good to not share. And, you definitely want people to take it serious. So again, if you are one of those people, support the channel, support my work by liking the video, subscribing to the channel, and leaving your thoughts in the comments too in the videos that you guys watch. Because it helps me know exactly where you guys are at as well. Let me see. It's crazy. I see things when you put them on now. Tony, I told you, remember the first day that you started with me, or the first week, I think it was, I said, just stick around and things will start to pop off. It may not make sense right now. Or just like with, you learning from ICT, it may not make sense right away. His videos may be long-winded, but if you stick around long enough, if you practice enough, if you touch on it and mess up and see things that work, see things that don't, you catch onto the lingo, you catch onto the signatures and price, the scripts that are programmed to offer price the way that it does, and your vision of eventually the fog goes away. And if there's someone here that is willing to walk with you like I do every day, every week, I think it's just helpful. And I prove that I know what's happening. I prove it. I don't just say it. And you guys that stick around, Tony, you've been with me on YouTube, I think for over a year now. And it's pretty incredible. Okay, and let me actually do something real quick. And you, my friend, just got a beautiful boot. So enjoy. Let me see. So yeah, we got one, boys. Big ass boot. So negative ass up out of here, bro. Bro, I don't know why people hop on with people that do different things just to come in and be a bunch of fucking retards. Like, okay, that's great. They may suck or not work for you, but shit. Wise ICT's concepts have the most profitable students, the most verified profitable students. I mean, it doesn't take a genius to get the fuck off social media, go touch some grass, and then come back on social media with common sense and then just look around. I mean, come on, bro. These people, there has to be those kinds of people because we need liquidity, right? So, I don't want to discourage all of them, right? I want them all to keep coming because, they feed a really, really good giant portion of the trading industry by being negative. They definitely don't serve themselves by coming in trying to talk shit. But it's fun. It's fun to see people talk shit. Because if only they would sit down and watch what we do and see how I call the market candle by candle, or any other ICT trader, right? I'm not righteous, okay? I'm not the greatest, but we're definitely above average here in this community, in the ICT camp. Those that take it serious, if only they just got out of their own way, they took their ego away, or took their opinions that they literally borrow from these other people that don't like ICT, and they make them their own. If they just step away from those mindsets and thought independently as a trader should, they would be pleasantly surprised, even if they don't like ICT. You don't have to like ICT. You don't have to like him to respect the fact that this stuff works, or to go ahead and listen to what he says, use it, and still talk shit about him, if that's what you choose to do. But you'll eventually learn that, talking shit is just a waste of your energy. And you're going to get booted from really good resources like, I'll go out on a limb and say this community is, so it is what it is. Yo, what's up, Mark, bro? Yo, Mark's been with me for years, like over 3 years. I think our 3-year anniversary was a long time ago. It's crazy. It's because well, I mean, that's the thing. If he insults other stuff, that's his prerogative, but it works. This stuff just works. And again, he should have a little bit more of a calm perspective. He should respect things a little more, but again, it's for marketing. It's social media. It's the Wild West. He's even said that, that's not who he is. And recently he wants to step away from the ICT persona because he knows that, it was toxic for so long. But toxicity sells. So you can't knock him, right? You can't really knock him for doing what everyone else does. I mean, everybody does it for the most part. It's not required, but he didn't, he wanted to build a community fast. So it's kind of the way it is. I don't necessarily agree all the time with it, right? But then again, that's really none of my business. If that's how he wants to build his persona, that's great. This stuff works though. So separate separate the person from the concepts, and I'm sure you'll get some value. Or listen to someone else that shows like we do, who's kind of not so controversial like that. I think it'll benefit you. And if it doesn't, and you just hang out, then that's cool too. I'll never knock someone else's way of trading, because you can't make money with other stuff. I personally don't believe in any of the other stuff. I don't have faith in any of it because I failed for years using other things until I touched his stuff. But again, if it works for you, it works for you. That's the beauty of trading. You could be your own trader and use your own stuff, and everybody can be profitable. It's not just one way or another. Let me see. Rather than be inclusive. Yeah. ICT don't really care about inclusivity. That's okay. That's okay, right? Like, if that's how people want to live their lives, that's great. But we don't want to let it affect us, right? If you're trading something, don't let it get you away from what you're doing. If what you're doing works with you, stick to it, right? Let's see. Yeah, Mark, it's been a minute, bro. I'm grateful to have students that stuck around like you. And you're an asset, bro. You'll always be an asset. We're friends too, bro. You're my friend. I meet up at some point, fly out to you. Let me see. Yeah, I'm going to have a productive third and fourth quarter. Yeah, absolutely, Tony. Damn right, bro. Manifest it. Yo, what's up, Alvinity, bro? It's good to see you. Hope you had a happy 4th of July, bro. I think you're in the US, right? If I'm not mistaken. Yeah, Illuminated. I would honestly agree with that in some sense. It is about mindset. I talk about it so much. I mean, every single week, it's so important that all my students that come to me in my private group, you are required. At least I say it. Obviously, I can't enforce it, but you're required, if you want to learn and actually get to the level that you're trying to get to have a psychology study. And I have all the different resources to dig into, a whole library of stuff that I've used over the years. Let me see. I'm from PH. PH, is that the Philippines? Maybe I'm ignorant on that abbreviation. Is that the Philippines? PH? Maybe. Yeah, let me know, Avinity. PH, is that Philippines? Yes. Oh, perfect. See, I knew. I will be traveling to the Philippines too at some point. I would love to meet any of you guys that are from over there or anywhere else. We have such a huge list of students that I'm planning on meeting and going to your countries. And again, we got our little plan that we've talked about in the private group for at some point, try to get as many of you guys as I can. Maybe in the future we'll go on a trip together. Maybe, possibly. It's definitely a possibility. I would love that, honestly, because you guys have supported me, many of you, from day one. And, you know, what better way to show my appreciation than to treat you guys in that way? But yeah, it's definitely a possibility in the future. Definitely a plan of mine. But let me see, I missed any question? Okay. So yeah, again, hopefully all this stuff makes sense. We'll wait for that secondary change in state. If this continues to drop, we're going to still continue to see downside pressure or interest, because there's no buying and selling pressure. There is in commodities essentially, but in indices and currencies and whatnot, there's an unlimited supply of everything. They could, out of thin air, create whatever they want, because, you know, that's how they create the money anyway in this country, right? And all over, just print it out of thin air, right? Quantitative easing, they call it. But yeah, so if the bonds continue to decline, the yields continue to rally, like we have our assumptions aimed at here, then we'll continue to see the dollar continue to ramp up. We've been reaching for this monthly fair value gap for about 3 weeks. Wait. No, a little bit more than that. The whole month last month. That's what we were looking at. Well, yeah, last month. This is the current month of July. So yeah, all of June, we were looking for this to potentially get targeted, especially once it took this high out. And then once it broke this high, we really started looking towards that. So this could very easily just be accumulation, manipulation down to a discount. If we go from the low here up to the high, we went straight to a discount equilibrium. We have the fair value gap at a discount. So that's a true discount array. And now price is kind of rejecting that. So if we can get this to get up above this candle here from this daily perspective, we will be able to then confirm that as a change in state. If it takes this high, that's a shift. So we'll be able to really confirm, if you're kind of uneasy about this, that price will go higher once it breaks above that. So you could wait for that simply, but we could really start to use early signs, like the fact that this was the fair value gap in here. Let me actually duplicate that to this 4 hour. So we could really use this as an early sign right here. Once it shifts above this high, this low, high, creating a failure swing here would then present this as a mitigation block type 2 dealing range, low, high, failure swing that breaks above this high that creates the failure swing. Once it breaks that, we have a very high likelihood, as long as the bonds and yields continue to promote that this will go higher, that this will then look to be a type 2 dealing range. And once this is taken out, right, that leg that created that range that houses this type 2 dealing range, once it breaks above that, this becomes a target and a high that's in jeopardy, liquidity that is at risk. Okay, especially because the daily chart just simply looks like we're retracing to then go higher. We have our change in state of delivery here. Okay, so price displaced through that. Okay, consecutive up candles. It also broke through this one. But I would really like to see, if we're going to go lower, if we're not going to trust buy side, so this is the opposing view, if price was to come up here, create another bullish candle, and then violate and not set us up with this type 2 dealing range, and it was to break through a bullish candle that forms, or, you know, maybe it breaks a bullish candle that forms, and it takes out this low and it inverts this level here, that's well over 3 PD arrays that now have been violated. So we may see price then continue to look for things like this. And this trendline liquidity will then be looked at as a potential target. Let me actually clean this up for you guys. I know it's a little bit busy in here. So yeah, that was the month of June. So now let's get our open price to July's open. Okay. 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 So you always want to grade your price swing, always. If we do end up running higher and it breaks this high and we start getting acceleration, if it's bearish, this low to that high, we should not even return back to the midpoint. So if we get a wick up there and it starts to close on a body closure basis below that, and then we get displacement, we don't have to see it break this low, right? If it just simply closes below this, when we come back up into it and refuses to close above it, that'll be a really early sign that we may look to tumble off a little further. Maybe it reaches a little bit more to a discount. But if we take this low out, and then hypothetically we see that the yields start to decline and the bonds start to rally aggressively, say this leads to a turnaround that goes higher, and we do get up above this level, then the breakdown in here that would unfold as a result would be supported by that. And so then you could reliably trust that our 3 PD array validation rules are now triggering, and then also intermarket relationships are now shifting a little bit as we go into this new month. Okay, so those are just some things to keep on the back end. I'm going to just go out on a limb and assume until we get this low to get violated, or another order block that forms that then gets violated, or we see that happen with a closure below this fair value gap. I will assume that unless that happens, this is just simply a retracement to then go higher, because again, we have a very, very logical level to reach for up here, being that monthly fair value gap. Okay. On this quarterly perspective here, or from a monthly perspective, we could see that that looks very obvious. If this monthly perspective here, if we can blow this up, if this monthly perspective was a 30-minute chart, okay, let's say that this monthly chart was a 30-minute chart, we would obviously see that this is a bearish breaker. Okay, so low, high, lower, low, prices in that breaker level. We have accumulation, manipulation, and if we start to displacing out, like close outside of this area, or it gets too deep into that candle, it very well may become a bearish power 3 on this monthly perspective, which again, 3 to 4 monthly candles create a quarterly candle, right? So, we'll see what happens. We have the new quarter that just started over here in June. So the open of that quarterly candle is here. So we got price rallying up first. So if this was to break it down below that that open price from the quarter, this last quarter that started, longer term will then be bearish. And we would have to, again, see the yields start to dramatically drop, which would come generally from a rate cut. If the rates get cut, the dollar falls. If the rates get hiked, the dollar will rally. Okay. So again, there's rate hikes being talked about. So if a rate hike does happen on July 29th in this coming month here, then we will end up blowing past this potentially. Or maybe it hangs around in anticipation for that. That's a possibility too. So we're going to have to be on our toes about that as we walk forward. But for now, price is above this, right? This could end up becoming a bearish breaker, but we're not going to know until we get a response. For now, we're going to go with what price has already been showing us, especially because there's a very logical PD array up here. If we can't even get up to this PD array and we start to displace lower, then we're getting confirmation that this breaker candle here from this large price swing on this monthly perspective is holding. So longer term, we may see price look to tank a little bit and then look for, well, a lot of it. That's a pretty large move. And then, of course, if that does unfold, then we could look for this. But for now, until we reach up into this level, that's what I'd like to see. We also have a high up here. We have the wick quadrants. So we got the 50% of this large wick here. We should stay above that as well. Or at least that's what we're going to observe. That is right here. Okay. Got the 75% up here from the level that I just showed you guys on that monthly perspective. But yeah, these are some context building ideas that we're going to utilize to help justify whether price gets up here, right? By again, initially starting with the respect of this, you see that there's a respect to that fair value gap here on the daily. So if that continues to remain the case and we can't even close below this wick, or, it cannot start to tumble over a little bit and it just starts displacing lower, that would turn us bearish. If it doesn't do that, we're going to keep going higher. I'm going to, again, go out on a limb and say we're going to go higher. Okay, I want to see if this can act as a retracement simply on this daily chart to then respect this level, continue to close above the midpoint of this monthly wick that I outlined for you here, those closures of these candles here are very significant inside this level. It's showing a refusal, a rejection behavior after it's retraced into a particular PD array, right? After it's been aggressive. So we retrace to a discount with a very clear, obvious target that could eventually be looked at, right? And gravitated to. So if we get this shift or change in state of delivery above this candle here, this type 2 dealing range is now being considered. It's also a mitigation block, right? Low, high, failure swing, the price breaks above. So when price comes down into that, that should act as a balanced price range. And we're coming off of this lower PD array here, and it's been bullish. And the yields still look like they want to go higher. They may reach up into this level. That plus the bonds continuing to go lower, right? If it does what we talked about, supports this if it breaks this high and starts to displace towards this monthly fair value gap. We can also, again, classify this as a market maker buy model, right? If we can break past the midpoint of this and it shows no respect to this range midpoint here, we should be able to slide on through, because this low to that high, if we're bearish, when price comes up into that, it should not even come close to the 50%. We'll see closures of the bodies underneath this range. This low, high, lower low will also act as a bearish breaker. So we should definitely not get up there if it's going to be bearish. But again, that's a contingency plan. This isn't buy and sells and we'll just see what happens. I'm assuming that given what we see so far, that it's going to be one-sided and get up into here based on all the context we've built up to this point. So I hope that stuff makes sense. Okay. Let me check the chat. Tony said he sees it. Beautiful, bro. Beautiful. Good morning, Jen. It's good to see you. Appreciate you hopping on. Vinity, you spent 2 weeks away. Hey, we all need a break at times. There's nothing wrong with that. You come back with a fresh mind. This stuff is like riding a bike, especially with the process that I teach you guys, or any process that you're able to organize with a lot of experience with ICT, listening to someone that knows, right? All this stuff repeats. It never stops. It's never going to stop. And how you know that? Because look at crypto. Crypto does the same stuff that this market does. If it was going to change or things were going to be different, crypto would have been the best vehicle to introduce a change. It hasn't changed. We call crypto just as accurately as we call the futures, and just as accurately as we call the stock market, right? Just like all the stocks, right, in general, by themselves. So it's all the same, okay? But yeah, plus it's a new month. Yeah, I agree, bro. So we got to be cautious with this new month. All right, so yeah. Do you guys have any questions? Let me know if you guys have any questions. You guys know that I always like to get questions before I move on, especially when we went through a lot of details as we have so far. But I hope you guys have been getting value. Again, if you guys do get value, don't forget to like the video, subscribe to the channel if you appreciate what we do here. It definitely helps the channel reach more people. YouTube's algorithm doesn't like the truth. So sometimes, you know, it is what it is. But if you guys can help me with that, that'd be great. And yeah, if you guys got questions, just let me know. Yeah, throw a one in the chat if everything makes sense so far. I know for a lot of you guys, it's a review. We talk about the same stuff every week. It never changes. It's always the same. The packaging is just a little bit different. The contents are always the same. But yeah, let me know. Throw one in the chat if everything makes sense, you guys. All right, perfect. Thank you, Tony. All right, so with that being said, if you guys have questions along the way, of course, always ask me. I will stop what I'm doing to cater to whatever it is that you have a question about. Because I'm here for you, right? You may think you're here for me, but I'm actually here for you. So that's kind of the relationship here, right? But yeah, so given all the stuff that we've just discussed, all the content, all the context, I could say, right? With the bonds potentially looking to go lower, the yields looking like they want to go higher, that may have an influence to push the yields higher or push the dollar higher. If that's the case, then we should have a reverse correlation to this, right? So if all of that stays true, if that remains true, this should find reasons to go lower. And, you know, there's a lot of stuff happening geopolitically, so it's okay for you to allocate room for there to be a crack in correlation. Just know that whenever there's a crack in correlation on the asset you're trading, like if the currencies are the only thing that are out of correlation with all the other assets together, given the risk on, risk off understanding that I teach you guys, then there's some type of manipulation happening, or some monetary manipulation happening in the currencies, the foreign currencies. And that could be country specific. It could be global geopolitic specific. Okay. So that's why you want to pay attention to some of the politics around some of these assets, at least the monetary politics, because it's very important. All the decisions that are made influence the market. Many times the market will present you with real world things that are going to happen to the economy. You'll see it in the market first, just like with the virus in 2019. Okay. The market tanked before the virus was mainstream, before anyone knew what the hell was going on. The market plunged in anticipation, because the market is a forward-looking mechanism, okay, in many cases. And things are all priced in to the tick before it ever happens. That is evidence of what ICT talks about as well when it comes to everything is controlled, everything is manipulated and whatnot to the tick. I mean, just look at the world events that happen and pay attention to what the market does ahead of those world events. Why would something that's not mainstream yet crash before the event comes out? It must know something before everybody else does. Okay. So, I mean, that's put your tinfoil hat on real quick, but I mean, it makes sense. It's a good thing that it's controlled. It's a good thing that's manipulated. Otherwise, countries can come in and short your stock market and it would go to zero because you have enemies, and that's not allowed to happen. Okay. So we can use it to our advantage because it's algorithmic, and that's how we're able to see repetitive signatures in price. Okay. And so it's a good thing, you know? So yeah, when we go to say the monthly chart here, this is a gross market to even engage in. There's a reason that I don't trade currencies no more. We call them every week, and it does, exactly what we talk about week in, week out, of course. There's times where it's kind of a shit show. It doesn't really decide to do much. Okay. And that's totally fine. You just move on to another asset. If you're still in currencies, I do encourage you, because the global financial system is shifting. It's moving to digital dollars. It's, central bank digital currencies, which I really don't like, because it'll take your privacy away financially. The whole debt spiral that all these countries are in, especially the US, unfortunately, stuff is going to have to change. The whole system needs to be revamped. The whole way of doing things needs to be revamped on the back end when it comes to the financial industry. So it's happening, right? They just started tokenizing the stock market on June 28th. The regular trading hours are now, by December, I believe, going to shift from 9 to, well, what is that? 9 to 4 Eastern, 4:15 Eastern, to 9:30 to 4:15 Eastern, to basically 23 or 24/5. So 23 to 24 hours a day, 5 days a week. So that's going to be a little bit of a difference, right? Not algorithmically. All those same levels that we look at are all going to be the same. It doesn't change the importance of the things on the back end that are coded. It can't change. It has to do what it's going to do, right? It's liquidity and inefficiency. So, when it comes to currencies and just the way that the financial industry operates, there's a lot of things under the hood that are changing. Okay. And it's public. Like, this stuff's public. The tokenization of the stock market's already happening. Go look it up. Use ChatGPT to ask about it, and it'll pull up all the information that you need to understand about what's going on. It obviously hasn't been shoved down people's throat. They don't want everybody to know. Okay. But, it's just another reason why I'm in futures. I want to be in the market that deals with retirement. It's more stable. Doesn't mean you're not going to get your ass kicked. Okay. Doesn't mean that it's going to be easier, but it's more reliable. It's cleaner. It really is. I can have a 30-point stop, and it runs one tick by my stop, and it won't take me out. If I'm in currencies, if it comes that close to my stop, they're just going to open the spread and take me out, because they have the luxury to do that, to manipulate the spread and the exchange prices, right? At will. Okay. So, and Forex, when you're trading on a broker, you're inside of that broker's liquidity pool based on their, you know, pool of liquidity they have for that um, particular fiat currency. Okay. And that's just a fact. You can look it up as well, and you could see that as a fact too. That's why they can manipulate it so much. That's why it feels like they're constantly hunting you nonstop, and you can't have tight stops because they're intentionally going and opening the spreads whenever there's a large pool of liquidity somewhere that they can identify, right? I'm sure that they do it algorithmically as well. Well, maybe they manually do it as well. Who knows? Just by shifting the prices and whatnot. But that's why I don't want to be in Forex. That's why I moved from GBPUSD to S&P and then to NASDAQ. That's kind of the progression you want as well. But that's something to consider, right? If you're here long term, if you're going to be here as a trader well into the future, I think it's definitely something worth considering. Look up some of the things I just told you about right now. You want to be plugged in because there are changes coming, not algorithmically, right? But overall, you know what I mean? It's going to give more opportunity. It's going to be more clean, less ridiculous price delivery, less, chaos. Still going to be chaos. It's going to be more precise chaos. I think we could say it like that. Okay, so, but we'll still do analysis on the Forex as well. But yeah, so again, we ran up. We had SMT at these highs here. We called for lower prices. Go back and look at some of the replays that we've done. I called the market maker sell model in here. We walked that whole entire thing down. We called multiple market maker sell models, and price hit our target here that we had outlined since April. Well, not April, since May, since we got that decline and the change in state of delivery that broke down. Was it on the daily chart? Yeah, it was on the daily chart. But this right here was a market maker sell model. We had a inversion fair value gap here, right? It stayed below the midpoint. You see the 50% of that gap right there? Take the volume imbalance to volume imbalance, encapsulate that whole range. You get the midpoint of that, and look at the body closures there. Right, we can get a visual, drag that over. Look how clean that was. Look how beautiful that is. That's algorithmic. It's absolutely beautiful. And then price continued to respect that. And we got this large jump, right? It ran up. It even took that liquidity pull out. But what did it do? Broke down, cleaned out this liquidity. And then this was a low resistance level of liquidity, failure swings, relative equal lows, and they hit it with low resistance capacity. Okay? Which is to be expected when there's failure swings, relative equal lows. And then, of course, another bigger failure swing as well with dollar going higher. Same thing with this, right? It did the same thing. This looks a little bit different. Same sentiment, though. All right. So now, when we're looking at this chart here, price has rallied up. We did talk about the order block in here. That's my momentum order block. That's a bit order block with a wick that has a displacement through it all the way. And then it comes back. It should not breach the 50% of that. It should continue. And if it doesn't respect that and it goes beyond it, it's most likely going to go the other way. But that in itself, that overlapping of that candle's range, that's beautiful. Okay. And then, of course, we got the midpoint. We got this order block being respected. We got the small inversion in there. Let me remove that so you could see that inversion right there. Once price closed below it here, that confirms that this is going to potentially be an inversion. It's highly likely to be an inversion fair value gap. So price runs up into it, tags it, and then we get another displacement. Remember the double change in state of delivery idea I taught you about? Well, you got this up candle here. That's the highest up candle, consecutive, right? It's got a gap. It's kind of sloppy in there, but nonetheless, we got displacement through it. We got a shift. So change in state plus a shift, plus an inversion for fair value gap confirmed. And then we get another order block. And what happens when this gets overtaken? When it breaks through that, it continues to go lower, confirming bearish order flow. That's a double change in state of delivery. Okay. So if you're confused up to this point, you think it's going to go lower and then bounce, wait for this. Because once that happens, I mean, I got to tell you that it is highly precise, highly consistent, that it's going to continue in that direction when you can have a double change in state of delivery confirmed, which is just simply one order block that gets displacement through it, that creates another order block that then gets displaced through it again on these higher time frames and on the lower time frames. Higher time frame, it's useful because it's a good order flow confirmed tactic, but it's also very useful when you're on the lower time frame because maybe it's retracing and you're wondering when it's going to start the continuation. Well, the double change in state of delivery, generally when it occurs, should have speed and distance running away from it because, again, it confirmed order flow, right? So I want you to keep that in mind, okay? Very useful stuff. I want you to go in and backtest this stuff, you guys, okay? Don't just listen to me talk. I'm not here to entertain you, okay? That's not why I'm here. I'm here to teach you. So the worst thing you could do is hear me talk, listen to my opinions, adopt the opinion, but not go in and look at things that I'm talking about, okay? Like have your chart up, maybe when you review this call, have your chart up and go through what it is that I'm talking about and find your own examples, okay? You really want to do that. I encourage you to do that. And if you ever need help, you could always DM me. And if you like my teaching style, there's always my private group too, so you could be with me every day. But I don't encourage everyone to join that. But if that's something you'd like, that's an option too. But this YouTube channel has so much. I do it every week as well, so that's okay as well. All right? So yeah, and let me know, right? Whenever you guys do back testing or study something that I share with you, let me know how it goes. I'm very curious to hear all of your guys' stories. I have so many students from all over the world, and it's definitely one of the more encouraging, inspiring, fun things that I've been able to do as a trader, aside from my own successes and accomplishments. I love seeing what you guys do because I came from literally nothing, from having no money, broke, homeless, having nothing, okay, to being able to do this, which, I mean, it's still just kind of crazy to think about. So yeah, definitely go ahead and do that. But yeah, with price pulling back like the way it is right now, I'm very curious because we're inside the middle of this range in here. Got this low to that high. We did take liquidity. Now we got this low here to that high. So that's our new range. So as long as it stays within this order block here, we can actually remove that right there. This order block right there, well, this one's lower, so more so this order block, right? These consecutive up candles, you get the midpoint of that. As long as we stay below this, right, that 50% level, and we stay below this high, we still have a likely chance to continue to go lower. Now, there's a difference though. If this turns into a rejection that pulls us into this inversion fair value gap, and that down candle then gets violated, that in itself is a double change in state of delivery. An inversion fair value gap is a style of changing state of delivery. A lot of times you look at an inversion fair value gap from a time frame above, you could then see that specific inversion many times is inside of a bullish order block on a larger time frame. Okay, so the time frames and PD arrays work hand in hand together. They have like this beautiful dance together that works on top of one another, and eventually you learn by watching this type of stuff and being aware of this stuff, how this stuff really operates all the time. And when you see one PD array, it kind of gives you context for another one when you move to the higher time frame relative to where you see this at. And many times it'll build even further context for this to then want to go, say, to the buy side. I appreciate whoever just subscribed, by the way. I'm glad you're getting value. And again, don't forget to like the video, you guys. Subscribe to the channel. We do this every week, and I'm very grateful to hear that a lot of you guys apply what it is that I teach you, because many of you do. You know, some hang out just to hang out, and that's cool too. Just to get like narrative and kind of use their own process with other types of trading with the analysis here, because we're correct a lot, right? And that's not to toot my own horn. It's just a fact. This stuff just works, right? So I appreciate you guys that appreciate what it is that we do here, more so than you know, okay? So thank you guys. But yeah, so as long as this fair value gap, right, if we're going to see this go higher, it's going to have to hold, create a bullish order block, or just shoot a wick down and then continue to go. But I'm assuming, unless this gets violated, unless that scenario unfolds, that because the bonds are still going lower, unless the characteristics change in that, we're going to continue to see that this is just a retracement to a premium to then go lower, right? We could take this high here down to that low. We're deep into a premium. So optimal trade entry level, if you guys remember ICT's first flagship model, which is just simply a premium retracement, that he later then said that to add on top of that to make it more effective, you get that optimal trade entry level, and you don't just use the optimal trade entry, right, from the fib. You're coupling the optimal trade entry, 62% retracement level, and a little bit above, not too far, because that could invalidate it, but at least 62% retracement level, coupled with the narrative being bearish at the right time, along with a bullish, a bearish PD array that supports, in this case, the downside objective. So you'd have to couple that 62% retracement level with a PD array at the correct time in a particular narrative that you've already decided is, in this case, say, going lower. Okay, so that's a model that we could see unfold here if we start to see this breakdown and see price get back below this fair value gap. Maybe you don't trust that this is going to go lower yet. Maybe you have to see this reject and then invert or reclaim this fair value gap before you look to try to continue to go lower. And there's really nothing wrong with that, right? Like you could literally wait till this closes below this fair value gap, which would trigger this to be a reclaimed fair value gap bearish. And then you could wait for a return into that. And then you go into your lower time frames because you know it's time now to then take a short, as long as it's within the time window you like to operate with, which maybe it's London, right? For currencies, London is very fast because, you know, it's GBP and Euro. That's all European, right? It's UK type stuff, UK time. So they move the most in London. Okay. So yeah. With that being said, if we go back to the daily chart, one thing I did talk about last week, I believe, was it on YouTube? I'm not sure if it was on YouTube. I talked about it, but yeah, no, it was, I think it was with my, oh no, yeah, I think it was last week. This is last week. This is 2 weeks ago. So we definitely referred to this when price was down here last week. This is a liquidity void, like I talked to you guys about earlier. When price does not have any liquidity or candle bodies or even a wick that trades through a particular price level, we could see that price trades through it here, but that's inefficient whenever you see that. So we offered sell side delivery from this perspective, right? It offered sell side. So what is it lacking? A balanced piece of price delivery is simply both sides of the market traded to, and then price pushes away from it. So then when it comes back into it, it has no real reason to continue to break through it unless, you know, there's some other objective it's trying to reach for. And when it does that, it tells you something for the other direction. So you can use it then as an inverted level. So like if this here is a balanced price range, say it trades through it, right? Or trades back into it, right? And then it looks to go lower. Say that doesn't happen and this is not present, okay? And price then rallies up and gets above this high here. That previous potential balanced price range that offered buy side and sell side or offered an order block bearish, when those things get traded through, they turn inversion. So if it was to come back into that range, that's an inverted balanced price range. And if it swept through this low and got above it, that would be a breaker also. A breaker is a type of balanced price range. A completed market maker buy and sell model. When you close through it, that's a balanced price range. It's a form of balanced price range. Most of ICT's PD arrays are balanced price ranges. Some of them are, you know, they have a little different functionality, which we're not going to get into right now. But for the most part, majority, like order blocks, inversion fair value gaps, breakers, just to name a few, and market maker buy and sell models that complete, those are balanced price ranges. Okay, a power of three that happens, right? When price goes up and comes down. The reason that holds is because we've already offered buy side and sell side delivery in that area. It has no reason to break outside of, say, Asia's range if it breaks through it and say we have a clear target down here. When it comes back into it, you should expect, especially if this happens on a Tuesday or a Wednesday, and there's a clear target down here, that prices, whenever it turns into that, if it does, there's no necessity for this upper portion to be targeted. Because guess what? It's a balanced price range. What is a balanced price range in its simplest form? Buy side, sell side delivery that price then trades away from. So that's a block of balanced price delivery. What about this? When price comes down into that, that's a balanced price range. 50% should not be traded to. It should accelerate away. Okay? And then it continues to do so, right? So as price continues to make these balanced price ranges, it's also creating buy models and failed sell models. Failed sell model to target the low. And they're also balanced price ranges. So they're little blocks of price delivery, every retracement that breaks above the high. Okay? And then once you break something that used to be a balanced price range, when it comes back into it and then breaks again, that is an overall shift in sentiment. And so now it should do it the other way. Oh, that's pretty ironic how that looks like a market maker sell model, huh? Inside that market maker sell model, there's BPRs happening. The market maker model itself is a BPR once it violates or completes the market maker model. So 50% of that should not be traded back to if it's going to be a completed market maker sell model in this case. Same thing's true for the buy models. Every phase of a market maker model creates a BPR. These are bullish BPRs. So, and then when it starts to break those BPRs, they should be treated as inverted BPRs, creating new balanced price ranges, continuing down to terminus. Okay. So I want to ask you guys, what I just described here, does that make sense? Because I'm telling you, most people don't talk about this because they don't know. Most people don't talk about it. They don't get what they're talking about. And most of these people shouldn't even be teaching on social media. But does that make sense? Because that's a banger. That's something that changed my whole trading. Okay. And I'm sure that if that makes sense to you, when you go in the chart and back test and you get more comfortable with this and seeing it from this lens, from a lens of market maker buy and sell models and all that, and from a balanced price range perspective, right? You see how all of this creates balanced price delivery, right? 50% never got violated. 50% should not get violated, right? This here, buy side to sell side, when it breaks through it, right? It's accumulation, manipulation, distribution. When it comes back, it doesn't have to go to 50%. We've already broken down. It's already a market maker sell model. So we don't expect this to be targeted. So what's our narrative? Bearish until proven otherwise. Okay. How about when we went bullish? Well, price went higher, lower. Once it broke outside of this, what does this create? Buy side, sell side, buy side. It's a balanced price range. So what should we expect? The 50% should not be traded to. Preferably, if it's really bullish, the upper 25% won't be traded to. But look what happened there. We couldn't even get to the upper 25%. So what does that mean? We're extremely bullish for that moment. So what's your objective? Buy side. And then what happens when you get buy side, right, with a low, takes out that low, fails to take that high, and then we break again down below, right? That breaks market structure. Because now we're going from bullish balanced price ranges to now setting up bearish balanced price ranges and inverted previous bullish balanced price ranges. This is why market maker model understanding is so significant. And this is why understanding the balanced price range idea, first of all, in itself is a PD array or a way of looking at price that can be something that you can engage on. You can frame a model around just looking at things from a balanced price range lens, which is just simply, again, buy side, sell side being delivered, and then price pushes away and then comes back to the range. It should respect the midpoint. You could literally set a model up with that, right? Again, every PD array is a balanced price range in itself, right? If it's going to be a valid one. That's why when 3 PD arrays get violated, the next thing that's going to be violated is you, because you're breaking multiple balanced price ranges. And then it starts to form balanced price ranges going the other way, right? So again, this is high level stuff. So I really hope that you guys take this and go study it and, benefit from it, because I know I have. And again, I'm here to pass the blessing on. And, if you want to learn more and more about this stuff and even in a even more in-depth level, of course, I have the option to go ahead and join us every single day as well. Which you could scan the QR code up there or look at the link in the description. But more importantly, if you get value from the content, don't forget to like the video. I pour out so much value on this channel, and it's a free way to say thanks and keep me updated, right? Keep me updated with how you guys study, what you guys study, what your guys' struggles and successes are from this. And, I'd like to be a part of that because I like to see you guys grow. I know how hard it was for me, and I wish I had somebody out here willing to do what I do. But luckily, I stumbled across ICT, which was close. And then I found two more of my other mentors who have together over 30 years experience with ICT, back from baby pips and whatnot. But, they helped me, and all that investment that I've done, I'm now sharing with all of you, and I appreciate the privilege to do so because I know time is a currency. And I hope you guys feel that your time spent here is not wasted because I do my best to not waste your time. I know how important it is. And I hope that every call you guys, spend time with me on, you walk away with something that, you could think like, wow, I've moved forward a little bit. Right. And then every time, hopefully, at some point you feel that you've moved forward a lot. Right. So, yeah. Let me see. Do you trade NQ? Yeah, NQ. I get to NQ a little bit later, but oh damn, it's already been 2 hours. Whoops. Well, time flies when you're having fun, right? So I appreciate you guys sticking with me, but XRP Huckleberry, I absolutely love your name. I'm absolutely heavily invested in XRP for the last 8 years. Longer than I've been a trader, I've been an XRP investor. So I absolutely love your username. So we'll actually get to NQ right now for sure. Appreciate the question, but yeah. So again, there's a little void in here. So if it does look to race up into this, I really do believe that that can be a target. Like if it doesn't hold this lower 25% of this high up here down to that low, if we can't stay in that lower level right there and it gets beyond to the 50%, we're looking at this. And if it blows through this, you guys know for a fact that we're going to target this as a failure swing, low resistance liquidity run. And, contingency in that case would then be a gap like this up here. And then we may see this turn to a market maker buy model in which, we'll be able to walk it the other way as well. So, yeah. So with that being said, hopefully everything makes sense. Let me double check before we move on. Any questions? Thanks for your knowledge. Yeah, no worries, David. No worries, brother. I appreciate the support sincerely. Because you guys could be anywhere else on YouTube, but you're here on my small channel listening to me talk. Some very small trader who sacrificed everything to get to where I'm at. I do have the wisdom, but there's other people that are more entertaining. There's, there's so many traits that these people have that attract more attention, yet you found value in what it is that I do here. So I couldn't be more grateful. So, it's the least I could do to pour into you guys as much as I can. Because I really do appreciate it. Trading's lonely, right? So if you can have a tribe that you could talk to and pour into and, help each other grow, I think it's a very worthy thing to try and accumulate or create. You know what I mean? Liquidity trading, I totally agree. Entertainment is for folly. Absolutely. Absolutely. They want that entertainment because looking at their trading and their understanding of trading with how ineffective it is, they got to have something to release. And here the release is everything clicking and the fog going away and you seeing what's happening in price by yourself and being able to eventually trust yourself. That right there is a lot more entertaining, at least for me. Like when I was first trying to learn stuff, that's what made me gravitate to ICT. Although I didn't like every, sporadic rant that takes place, inside those rants, there was a lot of value that I was able to thankfully accumulate. And luckily it kept me away from a lot of these nonsense people because I lost tens of thousands of dollars, both in paying people that didn't know what the hell they were doing to me just simply losing my ass, going through a lot at the time I was first trading. Like my life was in shambles. I had a kid on the way. I had a failing relationship. I was homeless before. So there was just so much that, should have forced me to fail. And you know, thankfully I found my way. So hopefully I could be that resource to you as well. Uh yeah, and they want gossip. Yeah, yeah, of course. Yeah. It's unfortunate because then it distracts them, right, from 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 really being able to see the value. But then again, it's his style. That's how he got 2 million subscribers in just a couple of months, right? Or well, probably a little bit over a year. So it sells. It really does. It gets a lot of attention, and he has something that works too. So I'm just not that kind of person. I just won't. I don't want to do that. I'd rather not. You know, I'd just rather not. I like peace. I don't like drama. I don't like to cut people down. Even if it gets attention, I just never have been that type of way. Just to get clicks or whatever. Business wise, it is a good business decision for most on the internet, because that's what sells. But I'm not going to feed into that. Just the way it is. And some will like that, some don't. Some come from outrageous people and they see what I'm doing and they think, oh, it's boring or whatever. But whatever, bro. Go be entertained. That's fine. What entertains us is the fact that everything we call, for the most part, maybe not everything, but most of the time, things that we call go straight to the intended target, including crypto, like XRP, right? Because we've talked about that here and there as well. A lot more in my private group because, we talk about crypto and all that. Some of the stuff I invest in and whatnot over there. Not many people like crypto. There's a community, obviously, but every time I talk about crypto, some people just don't like it. They always have something to say, okay? There's always something to say about what I'm doing with my money, which doesn't make any sense, to be quite honest. Thank you guys for those of you that did subscribe. Again, I appreciate y'all more than you understand. And again, I hope you guys are getting value. Liquidity Trading said, "What time? I'm not a noob, but enjoying." I appreciate that, brother. I appreciate that. There needs to be more people that are honest with their communities. There needs to be more people that show the realities of trading. It's not peaches and sunshine all the time. And you want to make sure you are with someone that proves what they're doing. At a minimum, they're coming on every single week, showing you that they can call the market and it goes to where they're saying. That's the world that we live in. And I can reliably say, since I've been public on YouTube, we've held that up for years. I've called the low 2 years in a row for the year, low of the year of the NASDAQ, 2 years in a row, right? So, there's something to this stuff, right? That doesn't mean I'm like the greatest trader, but I'm definitely, I definitely try to, share what I know, and it works, and I want you to test out what I talk about. I don't want you just to take my word for it, because why would you do that? Whether someone has a Lambo or not, if someone is flamboyant or not, why would you just take the opinion of someone on the internet without putting them through the fire? Ask them questions, right? Like demand that they show you, like I had to demand, because I was sick of people that just had Lambos and stuff like that. It's selling me lies, because I would use their stuff and it just wouldn't work. And to be quite honest, when we use other things, looking at the indicator here, indicator there, or whatever the magical thing is that some people say makes them profitable. If we're being honest, most of this stuff doesn't make any sense. Like, how could this lagging indicator show me where price is going to go in the future? Like, what we do is forward looking. We predict price. And some people say you don't predict, you're supposed to react. Reacting is emotional. We don't react. We watch the reactions in price, but then we're predicting what that response is going to be. And again, because what we do is very organized, it tells you the who, what, when, where, why. We're able to predict it, whether they want to believe that is true or not. You spend enough time here, you'll see that it's the facts. Not only on these time frames, but on the bigger time frames too, or on the lower time frames too. The larger to the lower. We're able to talk about every candle because every candle has a story. And I teach you about what that story is. I teach you how to internalize it. So let me see. So yeah, that's something you guys can expect by spending time here. You're not going to expect confetti and me jumping off off the roof and a bunch of flashing lights. I got a cool little light back there, but I mean, that's just about it, right? It's not flashy, but what is flashy is the fact that when we say something, for the most part, the candles seem to follow what it is that we predict. And that's for every asset, okay, including crypto. So there's a home for you here as well if you're a crypto trader. And even if you have other stuff that you do, other indicator-based ideas, there's a home for you here as well. There's a lot of stuff that I could teach you that you can maybe gain from this that you can then use to better your own trading with, whatever style you have. I don't want to discourage any of you to not use other things. But if you're learning from me, I encourage you to be a purist like I am. I only use ICT stuff because I don't want anything conflicting with the precision that we're able to see in price, because sometimes stuff conflicts and I don't want that to fog my mind up when my decisions are being made, because there's money on the line. You know what I mean? And I have you guys that I'm trying to help. I'm not a financial advisor. This ain't financial advice, and I'm not perfect, but for the most part, this stuff does operate in the way that we say it does. And I don't know everything, but what I do know is enough for us to make really educated decisions, very accurate decisions on a regular basis. And bits and pieces of it, if you do think that indicators help you, will still be beneficial to you, especially the way that we call bias and narrative from these higher time frames. It's ridiculous. I mean, I have a lot of students in the chat right now that have been with me for so long, and they could attest to it. You know what I mean? Like, we're here every week, and it's for whatever reason, my crystal ball somehow just works. Obviously, I'm being facetious, but this is the market, right? The way that we're teaching it. And it has to do with liquidity and efficiencies and consolidation. You know what I mean? And if it's not doing one of those things, then we wait, but it can only do one of those three things. So it's pretty simplistic. So just stick around, and no matter what you do, I'm sure you could get value. But hopefully we get value so far. What time frames do I trade? I trade all time frames. Okay. Yeah, I talked about this whole broker statement thing. My money, you can't spend my money. And again, if you think that watching what I do and calling the market is not enough for you, then this ain't a home for you, and you could gladly see the door. Don't let the door hit you on the way out. But yeah. I appreciate you, John. I told the idea of creating content, but the reality is you can make insane cash if you're a profitable trader. Yeah, that's the thing. I mean, I don't have to be on social media. I only chose to do it because I got tons of people asking me to start a channel, do all this stuff, because they saw what I was doing when I was shoving my broker statements and everything down people's throats. But it just attracted signal junkies, and I have no time to deal with dumbasses. Okay, like if me calling the market, and if you don't have two brain cells to rub together, and me calling the market every single day, every single week is not enough for you to think like, hey, maybe I should look and watch what he's doing. I don't think I'm the best. I don't ever claim to be the best. But if you can't put those two things together, then again, this ain't a place for you. And you might as well do yourself a favor and everyone else. See your way out, because there's a lot of people that'll like to shove everything down your throat and at the same time not know what the fuck they're doing. But they are pretty flashy and entertaining, so maybe they'll keep your attention. So if that's something you need, you can head over there. Let me see. You seem like a good dude. I appreciate you. I appreciate all of you guys for the love, seriously. And I'm sure you guys will find a really good home here. At least, if anything, just to gain some wisdom and go on and live your life. You know what I mean? You don't have to hang around all the time. Just get what you need and you can leave. But if you do want to hang out, if you like the vibe here, if you think this is a good community, which I keep it positive. Anyone that's negative gets the boot, because I could care less if they watch or not, or believe or not, right? You can rest assured this is a positive community. There's lots of good traders in this community too, right? I see Tony. Ignore the masses, bro. Majority of people are not here to learn. Absolutely. Yusuf, I love that statement because that's absolutely true. You're absolutely right. You're absolutely right. Yeah. No, you're right, liquidity trading. And mind you, most of those people, I mean, there are very respectable people that like to do that publicly. But again, what does that attract when you're showing these big payouts, these big amounts of money? First of all, it's attracting the people that are only focused on money, right? It's attracting the students that are solely here for the money before learning the process. And they're living vicariously through the person they're learning from. I don't want you to have that distraction. I've done it. Okay. Like I've done that before. That's what made people tell me to start a channel. They're like, please make content. I want to learn what you're doing because it's wild. I even showed some of it on my YouTube channel. If you go back to some of my older stuff, I was showing 4,000, 10,000, 8,000. Like I was showing it nonstop. But I didn't like it. Because only people that would come to me is, people that are just materialistic, like they're just so focused on my money and how I want to be like, I want to make that money. And then all they would ask for is, can you just give me signals? Can you give me signals? I don't want to do that. Okay. I could start a signal service and probably make a lot of money. I don't give a shit. Okay. I don't want to do that. There's enough people doing that. I want to do something that leaves an actual impact on people's lives. And you taking signals, think about it like this. There's not one person on the internet that has made money to the point where they can quit their job or build a legacy off of just trading signals. It's not the case. There's not one person. So doesn't that tell you that taking signals is stupid? Yet 99% of people probably do it, right? I actually have a case study that you can go watch, Trailer Poppy, if you want. I actually took a funded account, showed it publicly for 3 months, and we were hitting at 88% strike rate. Generally, my strike rate fluctuates anywhere from 69 to 80%. Sometimes in the high 90s, like last year, we were hitting at 91 to 96% for like 2 months, but it's not always going to be that way. If you have those big percentages, a couple of months, that doesn't mean it's going to be there forever because it's not sustainable. So you shouldn't aim for that. Anything above 60 to 70% is solid, preferably closer to 70. 2 to 1 with that type of percentage, right? If you're taking the RR like that, or even 1 to 1 with above 50%, you could still do good if you have velocity. But I've shown that as well. You can go back and look at some of my content in the free group. And again, I show it every single day in my private group where we're just every single day finding something positive. So, again, if you can't watch the content, verify that way, then again, maybe you'll have to go look somewhere else. But I'm not here to convince anybody. You'll be convinced by what you watch every week. But if you're brand new, I'm gonna let you take some time to decide. So yeah, it's the way it is. That right there shows you how little interest I am in trying to shove shit down your throat for attention, right? That shows you I don't care. What I do care about is helping y'all. And those of you that stick around, you do get the value and you do see that it's helpful, like Tony and many others. But again, how is that a selling point, right? I have a mentorship. How is that a selling point, right? If I talk this way, it's not. I don't need it, but I want to help. That's why I'm here on YouTube, and that's why I set that up. I only want the serious students that want to learn the process. I don't want to have people that are, let's pocket watch. How many cars you got? Who gives a fuck? Can you drive my car? Can you live in my house? Can you spend my money that you see fluctuating if I was to shove it down your throat? No. So how does that help you? Does what I say on the chart and teach in the chart work? Now that right there, that can help you. Anything outside of that doesn't help you. So, it's not worth wasting energy on, really. So yeah. Let me see this. Okay. All right. So I think I got to everything you guys talked about. XRP Huckleberry. Hey, God bless you too, bro. I appreciate the prayer and blessing. Appreciate you. Shoot, we may even look at XRP soon. Actually, at the end of this call, if you guys want me to, we could look at XRP. See what we've been talking about that as well, because I'm highly invested in XRP. and I could discuss why that is. Not that you shouldn't invest in nothing that I tell you to invest in, unless you understand what it is and you agree. But I got videos on here that yeah, I got videos on here too. You just got to take some time to go check it out, brother. I don't sell a course. I do have a one-on-one apprenticeship community where I'm going live, hand-holding everybody every single day, uh, which I rarely take any days off on. But I offer that, and I offer one-on-one assistance to work hand in hand with me every single week, which is a personalized learning experience. I don't have I'm making a course, like a basic foundational course for people that are part of that community, just because it's been requested nonstop. I'm just because I don't have as much time in a day that I wish I had, because there's a lot of students. A lot meaning like there's like 20 plus students that I work with quarterly on a one-on-one basis, and I only have 7 days and 24 hours in every day, and it's like 3 hours every call. So you can imagine, like, time is very limited, which is, again, that's why there's somewhat of a barrier. There has to be. If I want to actually teach and have the proper time and actually get good results with students, it's got to be structured that way. But that's why I'm at the point where I'm like, okay, I'm going to take the request and actually pump out some structured videos so you guys can watch. I have a ton of videos on this YouTube channel as well, and tons of live calls that teach nonstop. I have a boot camp or two. I have like a little mini course type thing, with a couple of different things that I've put in a playlist. Um, I'll probably have to make something on YouTube, like a specific course, just so it could be just a little bit more helpful. But just showing up to these live calls, you'll learn more than you'll learn in any course that you'll buy on the internet, literally, because I'm doing it, answering questions actively every single day. Well, not every day here on YouTube, twice a week here on YouTube, but every day in my private group. But even here on YouTube, just the 2 that I do, they're jam-packed and they're long, right? Look at this call. It's already been 2 straight hours. We've just talked about so many things already in the chart, which I'm sure a lot of you guys probably learned a little bit from, or a lot of it, right? But yeah, it kind of also depends on where you're at as a trader too. If you're brand new, I have resources that I could send you to. I may not be like the starting point because I'm pretty advanced. I obviously do work with students that are really brand new, but there are prerequisites that I'd like you guys to go through, which I could recommend if you are brand new. See, Tony said you're growing. Holy crap! Wow. Yeah, I didn't even notice how many people have hopped on. And oh well, people have hopped on and hopped off because they want me to give them signals, but it's kind of the way it is. But damn, I've had 280 people hop on already. I didn't even notice that. Sheesh. That's nuts. Hey, people are noticing, yo. Just gotta stick around and have 2 brain cells to rub together. What we do works. But yeah, Trailer Poppy, if you want to DM me, let me know some stuff about your journey, and maybe I can help serve you a little bit better. If you've been trading for at least 2 years and you've got a basic, or 1 or 2 years, and you got a basic understanding of ICT's concepts, it should be pretty simplistic. I mean, I have people that just started and they hop on these live calls and they just ask questions, right? They'll go through ICT's content, come here and ask questions, see us apply it live. And it's like a good partner to ICT's concepts. I'm a purist. I don't rename things. I don't have no interest in doing so. So I use it exactly as it's taught. And, the charter community is a nice, amazing community. So lots of benefit from that as well. So 7 years in August. So it's been a long, long time. Lots of chart time every single day. So got lots of pointers I could give you, no matter what level you're at. So yeah, go ahead and let me know that in DM later. But yeah, so all the stuff that we've talked about so far on the chart, I hope everything has made sense, you guys. Again, I appreciate you hanging out with me. Hopefully you guys have gotten value. But now let's move on to the indices, get into that final stretch. So yeah, just to reiterate though, I'd like to see if this can hold here and go lower. I want to see if this can reject and go lower. I'd like to see us get back down below this on the euro. If we or on the GBP, if we could do that, if it could decline from there and invert this fair value gap, that would be a lot more convincing. We are still potentially in a retracement to an optimal trading tree just to get into a premium. Like I said, this low here up to that high midpoint is honestly the line in the sand. So if it gets above that, it's a little too deep, and that may set this up to be targeted. And we may see the dollar look to decline a little further if that's the case. If that's the case, we'd have to confirm that with bullish bonds and then bearish yields. It's going to have to reject here if that's going to be the case. But for now, we're going to stick to what we already see. This may continue to drop. Just maybe rally up and go lower. This may decline to go higher. We got that liquidity void in here, like I just showed you guys in the euro. Or was it the euro? Yeah, the euro. It's got that little void. So if it does blow past here and we start getting acceleration, we may reach for that. If it reaches for that, I wouldn't be surprised if we get up here, because if that gets reached for, this is going to probably be deeper into this, and that'll make this a whole lot more meaningful. But for now, we still have buy side, sell side again. So all of that is, it should be balanced if we're still going to have the sentiment going bearish. But we'll see. All right, we'll see what happens. I'm going to assume that this is going to then create a market maker sell model potentially. Unless, of course, we reach down here, tag this. This ends up accelerating towards this level, and we see the dollar look to decline aggressively. That would put us in position to then, if the dollar declines aggressively, see this go higher. Okay, but we're not going to look at that right now. We're going to see if this can set up a market maker sell model. Okay, so again, I hope that makes sense. I hope it's clear as far as what we're looking for this and the other assets. But now we are going to go to the indices. Okay, let's go to the weekly. Let's take a glance at where we're at here. Daily chart. Whoops. Not sure why all this was so messed up in there. It's an old target from when we were down here. So yeah, there was SMT in there. 50% of the wick. You see the order block here, how it got respected. This is what ICT calls a rejection block. Equal bodies with a wick in the middle. Okay, and then displacement. All right, so we got a rejection block. Rejection block confirmed by the change in state of delivery here. Well, early change in state, full change in state was right there. It's also a high, low, higher high. That's a breaker. Okay, we had June tripping, going sideways. Let's get our open price for the month. Clean some of this up, actually. A lot of markups from last week. Sorry about that. Okay, so yeah, we got this bullish order block here. Came off this rejection block. Came off of this stop run. This is also a bullish breaker in itself. So we got a breaker, high, low, higher high. Came down, respected the midpoint. Closed a little bit below, but we immediately created the rejection block that got above it. So that, revived that a little bit. When it was down below the midpoint of this, that's not what you like to see if you're going to be bullish and you have a breaker, okay? You want to see if price is going to hit in that upper 25, upper 50%, and see if you can't get this thing to accelerate. We have, again, this change in state here, high, low, higher, high. That's a breaker. We kind of blew past that a lot. So, again, we're in a range. We're in the summer months. So it looks more so like we're in a state of consolidation or holding pattern. When you look at the monthly chart here, we're really trading inside this wick. Okay. I'm going to remove some of that. So yeah, we're inside this monthly wick here. So I definitely want to mark that off. Get a feel for the quadrants and how price delivery has effectively delivered around those levels. So if we look on the right side of the chart and we come down to the lower quadrant, well, let's look at after that thing was created. So that wick was created. We then came up, swept this high, created a rejection block. Notice how I talked about the rejection block here. Identify what that looks like for you. If you come over here and you see this, that's a rejection block too. So if price was on this candle to shoot a wick into that and reject, that's a strong indication that it was going to go lower. We never even did that. So it just created a fractal high as well. When there's a fractal high, the next candle after this candle forms, the next 1 to 2 candles can reasonably reach lower in this case if there's a logical PD array that it's going to reach into. Unless it's extremely bullish and that we have a wick like this, if we can't even close below that wick, it's probably not going to go any deeper than this low here. Okay, if it closes above this wick, that's a bullish signature. Or if it was to close above this area here. This is the new monthly candle. That's the upper 25% of that wick. If you're bullish and you're trading into a bullish PD array, that upper 25%, upper 50% should be highly sensitive to price. That shows you order flow. Okay, it reasonably describes the story that you're seeing unfold before your very eyes. It's not only on this time frame either. It's when we're on the 1 minute, the 5 minute. The same principle is unfolding, right? You still got to consider this because every candle is telling you a story. And this is the evidence of that. And if you've never studied this, it's probably like, oh no, that can't possibly be true. Okay, go in there and study how price delivers in a bullish price leg every time it pulls down to a ICT PD array, right? Whether that's an inefficiency, whether that's a wick or an order block or a breaker, whatever. Look at the behavior when it pushes away. Where are the closures of the bodies happening relative to the wicks that are inside that PD array you're studying? And look at all those examples in a price leg that goes up, and then do it when it goes down. You will quickly be convinced that looking at a PD array when price is trading into it, watching that upper 25, upper 50% get respected on a body closure basis, you'll see how that's telling you the story. And then if you could see that unfold and then price starts to push away, you can be confident that we will continue unless that fails. And if it fails and it starts to show that same characteristic going the other way, in this case, it would be going bearish, respecting the lower 25% of PD arrays now, which are wicks, fair value gaps, order blocks, rejection blocks, so on and so forth, then price is likely to reach down to a particular level that's obvious. Whether that's equal lows, it could be a single low from the liquidity mapping list I give you guys. I can actually, I think it's a good thing for me to pull that up for you right now, actually. So we got a lot of new people. I think we should, let me go pull that up for you. Where did it go? Okay, this is our liquidity mapping list. Okay, it's in my private group. It's in my free Discord as well. But this is what you want to look at the beginning of the week, at the beginning of the day. You want to look at these liquidity references. If there's stuff in here you don't understand yet, that's totally fine. Put it to the side for a minute until you learn it, or until, you know, it makes sense to you. But the main thing I want you to focus on for liquidity is here. Okay. Higher time frame liquidity references, very simply, and lower time frame liquidity references. Okay. These are all significant liquidity that price reaches for. So when you're on the higher time frame, you want to be paying close attention to these levels and higher time frame PD arrays you can identify, which are order blocks, fair value gaps, wicks, volume imbalances, rejection blocks, mitigation blocks, whatever ones make sense to you. You know, you want to look for them in price. Wherever price is at, where are the close proximity PD arrays? Where are these highs and lows? Previous day, previous week, previous month. The last 3 days highs and lows are significant too. All of that is liquidity that you could then utilize as a framework to reach for when you go to the lower time frame. Within that framework, that structure you build, that opinion you build, based on whichever one of these you want to see get reached into, you then on your way to those levels, have lower time frame levels of reference as well. London's highs, London lows. That's basically session highs and lows. Previous AM and PM session highs and lows. Okay. Monday's trading, you look at Friday's highs and lows. Okay. Because going into Sunday, and you're trading into Monday, Sunday and Monday are referring to Friday's liquidity that was left. So those can be very close scalps that you could take as you look for or frame a setup towards one of these particular levels that are in a bigger grand scheme of things. Because if this candle is going to go up to this level, wait, whoops, sorry, it's cut off a little bit. Sorry about that. What the hell's happening? Oh. Uh-oh. Okay. So yeah, if this candle here, why is this so important? Why is this so significant? Well, if this candle here was going to go up above these highs up here or above these equal highs, what is the first liquidity pool the price has to reach for? Can you tell me? Let me know in the chat. Let's get a little bit interactive right here, okay? If this candle, this blue candle, this bullish candle, was to target this and this, what is the first liquidity pool based on what you see here in the chart? Whoops. What would be the first liquidity pool that have to get violated if we're going to get up into here or here? Based on this chart, if you had nothing else to go off of but what you see in the chart. If this candle was to get up to here, what is the first liquidity pool that needs to be targeted? And this is going to reinforce why this is significant here. David, yeah, Dave, you've been here for a while, bro. You've been here for a while. So yeah, it's the previous day's high. We're on the daily chart. So that previous day's high is here. Okay. So that previous day's high needs to be used as a target before we can get to, say, the weekly or previous month high. Right? Then previous week's high, exactly. And then previous month's high. So there's a hierarchy when it comes to liquidity being targeted. And it's always been in front of people's faces. But for whatever reason, from the things that are taught on social media to, this shiny object or that shiny object or, whatever the case may be, a lot of these basic simplistic ways of thinking to help you gauge where price is going to go under the radar as you look for the next most advanced possible topic instead of focusing on the basics, right? This is a basic thing. I didn't learn this basic perspective until year 3.5, right? I didn't realize or think about it because I was so in a trance looking for so much other stuff. Okay. And then think about this too. If this, given what I just highlighted to you, if this candle, instead of trying to reach for these highs, was to reach for this low or this low, what's the first liquidity pool that has to break through? Let me know on the chart. Oh yeah, no, I kind of figured that, liquidity trading. I kind of figured that. But yeah, we're on the daily, you guys. So yeah, if this blue candle was going to reach down to this liquidity down here, what's the first liquidity it has to reach for relative to this list here? If this is all you have to look at, don't be thinking too advanced, all these different things. Just think simplicity, okay? So yeah, Dave, right again, previous day's low, okay? So this is Thursday's low from last week. So this is also, let me see. No, it's not. It's not. This is the weekly low. So if this candle was going to drop lower and we were targeting, say, this previous week's low or this previous week's high here, because that's the previous week's high, this is the previous week's low, relative to this week versus last week. If this is going to go down to this weekly low, doesn't it make sense for you for the first couple of days to target, if you're bearish, this low in here before you look to demand it takes out this low? So wouldn't it make sense for you to frame your setups, although this is your main draw on liquidity potentially, or this if you were bullish, wouldn't it make sense for you to target this first and foremost when you're on those lower time frames? You want to have that considered, right? Wouldn't that make sense? You'd be surprised at how many people don't think this way about liquidity. They try to make it too advanced. Where's all the PD arrays on the chart? Let me just go into the chart and apply everything at once. That's like you walking into your job, trying to do every one of the tasks that you're told to do all at the same time. You're not going to get a good result. I mean, that's not how the world works. That's not how it works. So it's no different in trading. You work with what you have in the chart that's being applicable right now. And not every concept, not every PD array, not every liquidity pool is going to be worth, hanging your hat on right away. Okay. Now, once this low gets violated, of course, we got this rejection block, and then we got this low as well. So before this low gets taken out as well, this weekly low, we have this daily low, and then what else? The rejection block. Go back to the list. Higher time frame references if I'm calling narrative lower to the weekly low. We have previous day's low, and then we have a higher time frame PD array, which is the rejection block, and then we have the previous week's low. And then after that, of course, we have the monthly target, which is down here. You could also get into the quarterly targets, quarterly highs and lows. Okay? So there's a hierarchy that goes on. You may have the main draw, that's the main magnet, but you also have these lower time frame ones as well. These smaller, more close, more near-term targets, and the daily highs and lows and London highs and lows, which is daily highs and lows and session highs and lows from the previous session. Those are my favorite, because a lot of times you will see that the London's high, if you're bearish, London's high will be taken out to then target previous day's low. But let's take a further step back here for a second, right? So yeah, this low is pretty obvious to be targeted, right? But what about this candle? When price opens up, we're going to be inside this high and that low. That's Friday's high and low, right? Or like the last candle, right? High and low from last week, because it was a holiday, so it screwed some stuff up a little bit. So when we go into this next week today, okay, when it opens up, we're going to be inside that range. So although this may be a good target, that may be a good target if we're bearish, or this may be a good target, or that may be a good target if we're bullish, we still got to find a way to get outside of this. Because it's a daily chart and that's a daily range, isn't it reasonable to think that maybe there's a setup that could be formed specifically aiming at this high or that low, depending on what your objective is? If it's this high up here, this is your first target to frame a setup on, and you can frame a setup off of that. Okay, and same with this. This is your first target if you're framing to take a setup off of this weekly low or that low. So you could frame a setup getting into that. You don't need this to be the main anchor. This can help you find a setup in terms of liquidity. Welcome Adventure Time. We are kind of deep in the call, but I appreciate you hopping on. I would probably recommend that it's, unless you want to hang around and hang out with us, I do recommend watching from the start. It's kind of a long video, so you could kind of skip around. We do talk about some stuff that are outside of the chart a little bit. So whenever you see that, you could just skip until we start talking about the charts again. Or you could skip until you see a chart that you like to mess with, if that's what you want to do. Or, you can hang out with us, right? Until we're done. I'm sure you'll probably be able to still get value. But yeah, welcome. But yeah, so does all this stuff that I just talked about in terms of a very simplistic way of looking at liquidity, does that make sense? Again, when it comes to session highs and lows, it's not only London. London is definitely my favorite, but there's Asia, there's New York, AM, PM session. Those are pretty much the main ones that I look at. And then, of course, all the stuff on this list here. Those are the things that I just kind of understand. Can you go back over internal and external to external? Yeah, well, internal range, if you're bearish, is going to be when it returns into the inside of the range that we're treating as, a retracement to go lower. Okay, the lows in a bearish trend are external range liquidity. When price goes higher, the highs are external range liquidity. And then the midpoint, like inside here, or not midpoint, but the middle part of the range, like from this low to that high, that high was taken, this low was taken, so that's a new dealing range if we're bullish. This is all internal range liquidity. So it goes from internal to external constantly. But highs in a bullish trend are external. Bullish order blocks, fair value gaps, all of that stuff inside a range is internal range liquidity. You're going to decide as well throughout your lifespan as a trader, throughout your career as a trader. It's probably a better way to say it. Um, which side you like to be on. Do you like to go against the trend, go internal, or do you like to see internal get swept and targeted so you could frame something to then target external? You could be either one. You could target external or be the trader that likes to target like fair value gaps inside of a range or an order block or a swing low or an equal low to set up that bigger move, right? You'll have to personally find where you're comfortable. Okay. It's very significant understanding with this. Very basic, just like the liquidity that I just laid out. But this is just how it works. You know, it's basically all there really is to it. I mean, we could take it even more advanced, but I mean, I don't really see no reason to. You guys are probably, some of you guys are probably confused already. Hopefully not. But maybe we can get more into the advanced side of internal to external. I've already kind of touched on one advanced topic, which is the deferred liquidity logic, which turns high resistance liquidity to low resistance. And we're also going from one mode of delivery to another, also encapsulating market maker models with that as well. So somewhat of an advanced topic relative to liquidity. But yeah, we don't have to get into any of that right now. Let me see. Is it not highly likely that Friday's high will be taken during Asia? I mean, it really depends. It really depends on what's happening. It's subjective. It's really depending on where price is at. That is a common thing that happens. When it comes to Sunday, you don't necessarily have a full session. You know, sometimes they'll work with it, sometimes they won't. Sometimes they'll save it and build liquidity for Monday to then go ahead and target Friday's high and low with a little bit of Sunday's liquidity as well, just to make it a bigger pool. Just really depends on what they choose to do. Obviously, we can't predict before it happens unless the chart's moving. But yeah, so that's definitely something that does happen. Whether it's highly likely or not is really relevant to what is happening in the chart at that current moment. And you know, right now, in particular, we're in low probability conditions simply because we are range bound. We're kind of coiling up, right? Those that trade retail, like normal retail concepts, they see a channel going on, or is it a channel? It's a wedge, right? They're waiting for it to break out one side, come back and go up, or break out the other side, come back and go down. But we're just waiting, right, to see us get outside of this. We don't need it to break out of this. If it could get above this rejection block, if we go higher, because I mean, look at the narrative so far. Everything is still going up on this monthly perspective. Nothing's really changed. Unless we close below this wick midpoint, that'll confirm that price has got a reliable sell side delivery unfolding. We do got to see how this inversion fair value gap here is going to behave. If we run up into that and it hits that and cannot close outside of it, and we displace, maybe even get us down below this candle's open price there, that'll be, again, one change in state, second change in state off of a stop run. So that'll set the stage for it to be a little more high probability, especially because we'll be leaving a premium and spending time in a discount. It'll make it more high probability that this failure swing is going to be a very nice liquidity pool to be targeted. Let me see. I say that not as a rule, but price was so low volume on Friday that Friday's high means so little and is so close. Yeah, I mean that's a good point. That's a great point. So I mean it is possible. You know, we'll definitely be able to make a determining factor how that's going to be used a little bit later today. Once we get things to open up. But yeah, we'll see what happens. I think today has been the longest call that I've sat and spent time with you guys. And it's been fun, right? Hopefully you guys have enjoyed yourself. Hopefully you guys have gotten value. Hopefully I've been able to answer all your questions and give you some perspective that may be helpful to you. Again, don't forget to like the video if you guys like the content. If you get value in any way, it definitely helps the channel. Wait a minute. So yeah. So with that being said, I appreciate you, Liquidity Trading. Yeah, if you don't follow me on Instagram, definitely go follow me at WMG Trading. I don't have any other username. I don't have any special characters. None of that crap. It's just WMG Trading. Nothing else. Do not let these people that are impersonating me trick you. Don't allow it. I've had to ban multiple people, go report multiple people, have people ban or have people report them because clearly I'm doing something right if people feel the need to impersonate me. Well, you wouldn't impersonate someone that's not correct on things. So how the hell is that a selling point? Right? If they don't have value and aren't leaving an impact, there's no real necessity to follow them. And I don't have a giant following. That tells you even more right there. It's just like whoever's doing it, sees the value and they're like, oh, let me try to catch him or catch his people up um, doing stupid stuff. So it's so annoying. I've been around the block. Oh, nice. It's wild to know how many students I have at so many different age levels. I have students that are the youngest I have was 16 up to 25, and I have well, yeah, so 16 up to 65. Isn't that nuts? That's crazy. It just shows you that it's never too late to do this. Um, and it's beneficial no matter who you are, no matter what you do, no matter what your background is. This stuff just works. It's great to have an extra weapon in your arsenal of prosperity. You know what I mean? And it works, you know. But don't be getting fooled by these people that try to impersonate me, please. Please, I will never trade your money. I will never ask you for crypto. I'll never do any of this nonsense that they try to do. I don't trade people's capital. I have my own capital. And the only people's money I trade for or trade with is prop firms. And I rarely even use them anymore, anyways, because I have my personal account. I don't need it. Okay. Um, so yeah. Yeah, no, I have, I believe, 7 traders that are above the age of 45 that I work with closely. They're all spectacular. Some of the hardest working people, for sure, for sure. So, and the maturity allows for them to go in and focus and like really not be swayed by nonsense and really look for what is actually being taught. Not, where's your Lambo, bro? First of all, I can go lease a Lambo for like $600, and I'm sure that would satisfy people. But that's what everybody does. They don't buy the Lambos. Most of them don't. Some of them do. I know a couple of them that have. Um, most of them don't though. So don't be fooled. Don't let the internet. A lot of stuff on the internet's not real. Okay, so don't be getting fooled. Unless they prove it to you and are worth listening to, your time is too valuable. Okay. And again, I am super grateful that those of you that stuck with me this long feel I have, things that are worthy enough um, for your time, like this much time. Like I really, really appreciate you guys hearing me out and spending time with me. What is the WO? That's a weekly open bond trades. Weekly open. That's what that orange line is. It might be a little bit off because I'm on the monthly chart there. Oh no. Is it correct? Yeah, it was a little off because it was on the monthly. But this is the weekly right here. So the weekly open was there. This new week that comes out, it's gonna repopulate it. It's part of my indicator suite. I have a WMG trading indicator suite from the first presented for value gap to something that basically has turned into a power 3 anticipation / 90-minute cycles, 4-hour open power 3 indicator. I got my indicator here that helps you with some timing elements, and then I got my razor model, which is a signal weapon. Okay, it shoots off a signal from one of my or multiple signals from one of my models that I've discovered called the razor model. It's a flagship that I have discovered on my own. ICT's never taught, um, using, of course, his concepts, right? So it's probably something that he already knows. He has publicly stated that this way of doing things is a entry technique. He didn't give it a name. But yeah, these are just some of the things that you get. SMT indicator that I made as well. And then all these other ones, you guys could copy these if you like ICT indicators. They all have their own special role, but yeah, I have a standard deviation indicator too, helps with projections. Yeah, it's stuff for my private group. But the ones on top up here, they're not. You could go grab those. This is part of the indicator suite as well. But central bank dealers range, that's not. All these up here are not. So you could go ahead and grab all these. But yeah. So just to answer that question. So with where price is at currently, honestly, until we get a break away from this nasty range, I will be going into this week 50-50, kind of sitting on my hands, pretty confident in these other assets to do what we mentioned. And if that is the case, if they're going to do what I mentioned, with the bonds potentially going lower, the yields going higher, dollar going higher, right, off the yields going higher and the bonds going lower, the currency is potentially going lower, right? If we see that take place, that'll then have an impact on the stock market. Again, the stock market looking to go lower, right? If we see the indices go lower from this, say it stays below the parent equilibrium, right? From up here down to there, right? Let me actually clean up some of this stuff that we don't need. So it's a 2-day bullish order block. We are above the midpoint here. So if it could stay above that midpoint of that order block, that'll be still somewhat convincing that it wants to go higher if it stays above it. Again, we got a rejection block here. We got a rejection block here. So there's 2 rejection blocks there. We couldn't even get down into that. We have a fractal low here. We got respect to this wick. So if we can get price to get back above this bullish order block, that'll set the stage for us to then come and target some of this up here. We have regular trading hours gap levels up here. I'll leave those for you to go dig into on the lower time frame. But just know that from the past couple of weeks, there's a lot of regular trading hours gap inefficiencies that are above us. And they could be used as a target if bullishness does remain. We do have a large wick in here. So this wick is definitely something to keep on your radar. Okay, we got the parent range, and then we have stop run here, back to the middle. So we're literally at equilibrium of that parent range. So again, you guys know that if I am seeing the prices resting at equilibrium, we have no choice but to wait because it is 50-50. They could break out above this candle here, and then that would confirm the price is willing to go higher. It could break down below this candle here and then look to target the trendline liquidity and the failure swing in there as low resistance. And that would set the stage for us to then go lower, probably reach down into this level over here. Wait. Let me see, what is that? That is, I believe, that's that fair value gap right there. So again, we got sell side, buy side delivery. So what part of that fair value gap is the most significant if it was to return and revisit that fair value gap? This level here. Why? Because that's got buy side with no other trading on the right or on the left or the right. So that little piece of this high to that low right there that encapsulates this fair value gap, this is the most sensitive part of that fair value gap. That is truly inefficient. This is not, because it has sell side and buy side delivery. So if it comes back into that, that would have been a bullish breaker at the same time. But it didn't. It rallied up aggressively because they were on a rampage. So them returning down into this level, if they were going to try to dig into that, right, that would be where I would be looking at. So if we break below this wick midpoint and it closes and we can't continue to stay above this wick upper 25%, upper 50%, preferably the upper 25%, because that's a bullish signature. If it can't do that and we close below this midpoint, again, what is our near-term target? Well, that low looks pretty nice. If we were to close below that, this wick, followed by displacement, if we can get a big candle that pushes us lower, that would create a balanced price range short term. until we get down into something like this if they wanted to reach into that. But they may not want to get down there. It may want to just keep going. It may want to hold this. Maybe it sends a wick down below this and then immediately rallies from this fair value gap because you still have this one as well. So that's an earlier one. It's inefficient. Why? Because there's no sell side, but there is buy side delivery. There's no sell side in here. It's up to here. So that's inefficient. Okay. All of this, right? Volume imbalance up to there. I think we'll just note this actually. Keep that one first and foremost. If it blows past it, then again, keep that in mind that this is still part of the narrative if it was to drag lower. Okay. Okay, no worries, liquidity trading. Appreciate you spending so much time with us. Hope to see you again. God bless. Have a good rest of your Sunday, bro. But yeah, so yeah, hopefully that makes sense. So with that being said, all these other assets that we talked about, I hope you guys are in line with that. I feel I have kept you here long enough. But overall, when I'm looking at this, the indice chart, just to keep it short and simple about what we're going in looking for, this here is high resistance. Okay, we got a stop run. Okay, stop run into that. And price rallied up. We now took out this liquidity up here. We did trade into high resistance in here as well. Okay, and then we ran up. We've taken out this liquidity, and immediately we have started pushing towards this low. We're inside this range. If it's bullish, we're going to stay above this 50% level because we've now traded below it. Now we're back above it. So if it's going to break down through here, I need this order block, this up candle, to be violated and closed below. If we could, or it doesn't have to close below it. Order blocks don't require a closure below or above. They just require you to simply tag it with a logical reason to go lower. Okay. If it tags it with a wick and comes back into it, no, it's best to wait till it starts to push away and then comes back one more time. Because once it's outside of it, any return back into that lower 25% should be sensitive. And in this case, you have one, well, let's actually move it to the daily. We have one change in state. Breaking down below this open price will be a second change in state. That'll be a full-on overall shift in sentiment to then try to target the lows here. And maybe it gets excited enough to reach down into here. I'm not going to decide whether this is something highly probable yet or not. I want to see us get out of this range. This range, I mean, you can make a guess for whatever side and you still have a 50-50 chance of being correct. Okay, because it's literally in the middle of the range. It's not trying to do anything. It hasn't committed yet. Now, if it breaks above this candle's high, comes back down into it, and then rallies, this will now be a failure swing. And then when it gets above this rejection block, that could be used as support to then build to get us up into this. I like the rock climber analogy ICT used before. When you're seeing price bullish and it's breaking through PD arrays and it comes back down, touches them, and it keeps going, touches them, keeps going to a particular level, you can look at this as the peak of the mountain. As it breaks through PD arrays, as it inverts them on its way to going higher, every time it returns into one of those levels or one of those PD arrays, either inverted or in this case, a bullish PD array that should keep pushing price higher, they could be looked at as a rock climber gripping different parts of the rock as it climbs up or as he climbs up to the top of the mountain. If this is your mountain, as it goes higher, breaking through order blocks, breaking through fair value gaps, break and inverting PD arrays, creating bullish PD arrays and respects them in the upper 20, upper 25, upper 50%, as it breaks through wicks and returns into them, respecting the upper 25, upper 50% on a closing basis of the candles. They all act as gripping points as it climbs its way up. And until those gripping points fail and start to do that same thing just the opposite way, and then, of course, double changes in state, shifts in market structure start to occur, only then will you start to then look the other way. Okay, and then start to go short. Like in this case, if it respects this, which we're trading up into that order block, right? We already tagged it. So this next candle has a decision to make. We're above the equilibrium from the parent range, right? This high to that low. So it's going to have to either stay above this, come down, respect this order block and the 50% and the midpoint, right? Because this high up here down to the low there, that's a 2-day bullish order block because these are 2 daily candles. So that right there is the midpoint of that order block. It is on its last legs. If this breaks through this order block, we will now have inverted this 2-day bearish order or bullish order block. And we have now then triggered in the bearish order block here on the daily chart. And multiple PD arrays will have been violated in that way. It'll be an order block right here, the fair value gap. And then if it closes below this low here, that'll be a third PD array. But we just really need this rejection block in there to be taken too. That's part of the order block here if it was to break lower. That would confirm us going lower to these lows, and it would make us bearish. Otherwise, if it drops lower, respects this, and we displace higher and get above this candle, I'm very confident that this trendline liquidity, this previous week's high, which is part of equal highs, I'm very confident that that will then be targeted and get violated. Okay, and then we'll be bullish, and then see if the other assets can support that as well. We'll see, right? We'll see what happens. So one of those two scenarios is going to have to unfold. I will know for certain, at least by Tuesday. If I decide a little sooner, I'll let you guys know in the free Discord and the private group. Those of you in the private group on Monday, we'll be live pretty much. So I'll give you like a live update. so yeah. Do you guys have any questions about this perspective that I've laid out for you, and any of the opinions that I have expressed about what we see in price? If you guys have any questions, I'll spend probably the next 10 minutes, call it 3 hours and 30 minutes before we leave. So just let me know if everything makes sense to you and you're fully in line and you like the content today, you got value. Just throw one in the chat, just so I can know where everyone's at. Again, I appreciate all of you guys for hopping on the call and sticking with me as long as you have. I really do appreciate it. Because what we have works, you know what I mean? So, Derek, I'm gonna have to request that you restart the video. Pull it all the way to the beginning. Because there's a lot. We talked about a lot. So much. Yeah. And again, every single Sunday, we're live at 6 a.m. Pacific Standard Time. Every single Tuesday, we're live at either 5 a.m. Pacific Standard Time or 6 a.m. Pacific Standard Time. Faithfully, it never changes every single week. And 5:30 or 5 a.m. Pacific Standard Time or 6 a.m., what makes me decide that is the news. If there's news at 7, I'm going to be live at 6 a.m. Pacific Standard Time, or what is that? 9 a.m. Eastern. Okay, if it's at 5:30 a.m. Pacific Standard Time, or what is that? 8:30, or wait, 5? Yeah, 8:30 Eastern. I will be live at 5 a.m. Pacific Standard Time, 8 a.m. Eastern. Okay, for those of you that may be new to the schedule and whatnot. But we're live every day. I don't think I've taken a day off in probably since I started trading, honestly. Never, even on my birthday, 3 days ago? Even on Christmas, even on every single holiday, every single one of them. I'm live, unless I have a one-on-one I have to do. But live with my private group every day. So yeah. So again, twice a week. One is a Sunday prep call like we did today, breaking down the whole entire market perspective, giving you a hugely detailed from start to finish, from no decision to this is what I'm going to decide to do or watch in price, and everything in between. And then Tuesday is our live call with actively trading, me calling every single 1-minute candle while actively referencing the things that we do on Sundays. So they kind of work hand in hand together. It's like a machine, right? So yeah. But yeah, in a nutshell, before I let you go, I guess I'll run through quickly what our opinion is, just real quick, okay? The yields, I'm trying to see if we can't get us up into here. If that's the case, we should see the bonds go lower, right? We should see it respect this. And there's a lot of details. So again, I'll let you guys I'll let you guys go back and look at it. But I think that we could be able to reach down to there. That should have a bullish influence on the dollar, bearish influence on the currencies, possibly the indices. But again, they're in consolidation right now, so we'll have to wait and see. And then, like I said, the dollar, if the yields are going higher, bonds are going lower, this should reach up to this monthly fair value gap. That's what my objective is. We fully know that that's the case once we break outside of this. This order block will be violated. This fair value gap will get reclaimed. And then we'll also change state of delivery above this as an order block. While we respect this fair value gap, basically just came down to hit a discount to keep going higher. The currencies, right? We talked about how this is potentially just a retracement. If the bonds are going to keep going lower, it may and the dollar goes higher, this should just simply be retracement to then set up a market maker sell model to go lower. And if this doesn't respect that and it flies up, we have this as our initial target, that liquidity void, which again is a point in price where there's no trading whatsoever. There's not a wick, there's not a body, there's nothing except here. And all of that is sell side delivery. So this is truly buy side inefficient, right? And sell side until it traded through it. So price may not be satisfied with leaving that before it looks to go lower again. So they may look to visit that. They do this all the time when these levels are in place, all the time. You'll see something that looks like a BPR, but because it has this, it gives it up and it fails. That's one of the reasons that balanced price ranges fail, right? One of the circumstances, okay? When there's a little inefficiency like that. Otherwise, right, this would be buy side, sell side, completed market maker sell model that then just comes up to the lower 25% and then goes lower until proven otherwise. Or 3 PD arrays get violated to the upside on these upper time frames, okay? And then, like I said, the indices, right, on this monthly chart, we're reaching into the midpoint of the higher time frame wick in here. Let me actually change this a little bit. So we'll keep that. And then again, we have the wick here. As long as price stays above this area, look at the right side of the chart. We're closing above it, right? Above that 50% on that wick. So again, if we were to get change in state of delivery, coupled with this midpoint of this wick being respected, this starts to look a whole lot more meaningful. We got all these stop runs in here. Yeah, we have the sell side down here. Yes, the bonds are dropping. That could influence us to go lower, but I would really like to see if we were to trade above this while respecting this on a closing basis, if price is going to try to reach for these equal highs. Again, we're in the middle of the range. It's 50-50. So depending on which one it looks to reach for, right? Like if it breaks out this way, I'm looking here. As long as it respects this, because we'll have one change in state and then a second change in state there. So that's double change in state to the buy side, like I taught you guys earlier. And then, of course, we'll have it the other way if it breaks this out. If it breaks through that, that's a double change in state bearish. And we have easy target there. And then maybe even it gets excited enough to come and take this. And we have the gap down here that I mentioned as a possible target. That makes sense if the bonds are going to keep going lower. So you understand we have to keep tabs on these other assets to see what the relationship is so we can have full clarity and trust behind whatever direction it is that we're looking to trade towards. Okay. So again, I hope that all the stuff we talked about today was meaningful for you. I hope that it helped some or all of you. If you guys are new here, don't forget to like the video, subscribe to the channel. I appreciate you guys taking the time out of your day to spend it with me. And I hope that you did not feel you wasted your time, because that would be unfortunate. Because I definitely do my best to jam pack these long calls with just nonstop value, me going back and forth with you guys, answering questions, because nobody else does this. You know, most people don't give their audience any time of day because they got egos, which we talked about earlier, which I don't have. Okay. I guess we all have an ego in some way, but it's not toxic. Okay. And I don't think I'm the best. I'm definitely above average. And spending time here, you guys will be too. Okay. So with that being said, let me know if you guys need anything. Follow me on Instagram if you haven't already. God bless you guys. Hope you have a good rest of your weekend. And I will catch you beautiful people here on YouTube back live on Tuesday um, at 6 a.m. Yeah, even though there's no news, it doesn't matter. We'll still be live. Um, maybe 5 a.m. I'll decide. Whatever I show when I set it up later, the whole like scheduled live call, that's going to be the time. It won't change. Okay, so you can expect that. And those of you in my private group, I will see you, beautiful people, bright and early tomorrow as we see what PMI does. Okay, so yeah, God bless you guys. Thanks again, and have a good rest of your weekend.